A very good morning to you. The 14th of July. What a weekend of sport. We've got the first Italian Wimbledon champion. We've got the England women's team absolutely smashed it yesterday. And then some people are using an excuse of men chucking a ball around to drink all day. Which one were you?
Last day of the test, finally poised. Very exciting.
Go on, give us an update.
Ben's, well, they drew in their both first innings, and then Ben Stokes took a wicket on the last ball of yesterday's session.
Well, he was almost down to his last ball in the
yeah, he was.
that I saw.
Yes, I saw. Oof, painful yesterday.
That is not.
The radio said it looked like it hit him in the stomach. Oh no, I think it was a bit lower than the stomach. So yes, very exciting weekend. My dad has spent the weekend watching probably 3 things at once, you know, just channel hopping every.
It was one of those ones to have a couple of TVs. And there we go out over. It's a bit cloudy this morning, little bit cloudy.
Very sticky in here this morning.
Yeah, the building that we're in decide not to bother putting aircon on at the weekend because that would cost them money. So if there's nobody in the building, why put aircon on in 30 degrees?
I can't argue with that logic. It's just the problem of when you get in at. It kicks in at 7. So if you're like you and me and get in early,
yeah,
already feel like we've been here for hours.
So we got 2 fans going in the studio, more than we've got.
And the fans, obviously, in the chat.
And good morning to you all as well. Silver Surfer, go our Bitcoin supporter in the chat there. That's right, Bitcoin hitting 120,000 for the first time ever in history. Good morning to you. Good morning, Vlads. Good morning, Gavin. Good morning, Maturin. Buenos dias. And would you all like to know what's coming up? Because producer Phil's getting very excited about it in my ear.
Is he? How long can you keep him waiting?
Right, BT's through with us till 8:30. Then we got a lot to cover. Beachy being the eternal bear. Me thinking, at last we get a bit of respite. Oh, I got excited when we got that EU headline out. Then we got Matt Arbour in at 8:30 to speak to Angelique, give us an update on vol markets. The All Sessions takes us through to John Meyer. John Meyer is the mining expert, right? So everything we need to know about copper. Then John is going to update us, and well, a bit on silver as well. Of course, silver has been building and building, but we're here on those mining names at 9:15, and then your buddy's in at 9:35.
He is, yes. He's back. You know, all good, raring to go. I hope.
How was last week's?
I don't know.
Christopher Beecham.
He's the one with the spreadsheet. He's the one with the spreadsheet.
It seems to be a good year so far, though.
Yes, it has. Yeah, it has picked up quite a bit. So not a bad first.
Yeah.
I think we were 13% up in the first half. I think. So and without a lot of the volatility.
More than me. Actually, no. My ISA's doing well because of Smarter Web, but my trading account definitely is not up 13%.
Oh dear.
Because of April the 12th. April the 11th, was it?
Still nursing your wounds from that one.
Oh no, the recovery's on,
yes.
But it's clawing back.
Yes, one step forward.
And this morning has helped a lot. Let's, well, I'll tell you what, let's go into overnight action and then we'll take a look at where we are with all the futures. So, yeah, we got a little nudge down in the futures. In line with the weekend markets, actually, considering the weekend markets are very much flow driven, then everybody got it right. Down 50 basis points.
Yeah, there was a little bit of uncertainty, obviously, when the news hit, because he sent it, I think, it came through Saturday morning.
Yeah.
He'd written his letter, disgusted of Washington.
His Saturday morning to our lunchtime.
Yeah, exactly. So it would come through. So it was all the letters finally arrived, because last week was all, okay, Japan, South Korea, what's the EU one going to be? Because he really doesn't like the EU.
Yes.
Almost a conspiracy theory to convince it to set up to screw the Americans. And so how much was it going to be? 30%. What was the original from April the 2nd on the EU?
Well, I thought it was 20, the original.
Yeah. Is it? I don't know. I'm going to have to check that now.
I do think, obviously there's the 50% auto tariffs.
Don't ask the White House because they won't know. They don't know what it is really.
Well, it's changed so much that it is really hard to tell. But you can see on those futures there as well. Yes, the FTSE's down 12 basis points. The good defensive home it is. Thank goodness for Brexit, people. We would have been tied up in this mess this morning if it hadn't been for that. And then, Bitcoin up 2.6%. Look at that.
122, not even 120 now.
122,000. It moves quick, doesn't it? Last blink, it was 108.
Yeah. It's like the DAX used to be. Blink and you miss it and off it goes. It really has just moved in a straight line the last, what?
Yeah.
Well, yeah, we were a week ago, we were 108, so...
But you could feel it then. It was just bubbling and boiling, and it was, I don't know the physics of it, but it was preparing, working up the steam to...
Coiled spring, wasn't it, around 110. It has hit resistance since late May. And then as Axel would tell you, once it breaks resistance, off it goes.
That's right.
Yeah.
So, and then just on the currencies there as well, the pound continues to take a beating, and that is because Andrew Bailey interviewed in the Sunday Times this morning. We can go to that. He is talking about potential rate cuts. It's actually the front page. It's not even the business section. That is obviously that horrific chart. Horrific crash in Southend there. The Times have led with a very aggressive photograph on that. Bank could cut rates if the job market slows down. Andrew Bailey warning about the slack.
The slack.
That's what he's talking about there.
Okay.
If the slack continues to build, I didn't know he'd been there for 40 years.
The BOE?
He's a lifer.
Is he? He
Yeah.
was the FCA, wasn't he, before?
Very impressive. Our good friends across at the Bank of England, of course, giving you the chance to create your own banknote.
Yes.
Which we know where you're going for, don't we?
I just think Margaret Thatcher, to be honest, first woman Prime Minister, regardless of your politics. I'm aware it's not a popular view in my house.
Well, and in your own house, yeah. So we can take that chart off for a second. So, we spoke about Maggie in our new podcast that Jim Paxman is mentioning there on the chat, giving us a nice little leg up there. So the Art of Investing was released on Friday late afternoon. It's on the IG.com YouTube. But if you want to listen to it on Spotify or Amazon or Apple Podcasts, then producer Phil is going to put up the links in the chat in about 2 minutes' time. And it was nice. There was a lot of kind of introduction into the theory of it, what we're trying to do in this one. So week 2, we'll get straight into it. But really enjoyable. We're talking about a market update. And then we go into the hot topic of the week, which is around the ideas of how to run a portfolio. And the reason we're doing that is because we are launching a model portfolio. So yes, the 3 of us will be running a model portfolio for everybody at home to follow. It will be a long-term, the theory of investing for the long term. And that's because these 2 guys were are 2 of the best at running money in the country, having worked for George Soros. Chris did, who might be on the chat there at home under Poppy. And then Mark as well was at MAMS, as we know it for a while, BlackRock, Merrill Lynch Asset Management, and then Deutsche as well. So yeah, these guys have been running money for 40 years. Now they're doing it on a podcast for you at home.
Exciting times.
And there we go. So Phil's talking about the Discord portfolio versus the Art of Investing.
Yes,
portfolio.
you could run a Discord one and see where the wisdom of the crowd.
So that is the plan. The plan is that you can try this at home. You can run your own portfolio under the same kind of terms. It's not all about going all in on.
All about the flashy, as my first boss used to say.
Beachy coin. There we go. There's
I
a new
have my own
crypto.
coin, shouldn't I? Yes, because they'll probably do better than Trump's, which is down 99%.
Is it really?
I think I saw last week. It's just
Wow.
partly dribbled away.
Yeah.
So
Game over.
there you go.
Right. Should we go on to tariffs?
If you must, wherever we are now, whichever day it is, it's tariff on, tariff off. It's mostly tariffs on this week, isn't it, with the letter?
Yeah.
So it was Mexico and the EU at the weekend.
Tariff,
Letters,
love the
latest
tariffs.
lucky recipients of the angry man in Washington, his big Sharpie pen.
Well, the market doesn't believe him anymore.
No, the market doesn't believe it.
Whatever number you throw at, it doesn't matter because it's not going to happen.
And that, I suppose, is a bit dangerous. Okay, we've all had a lot of fun taking the mick out of him with tacos, and I've done it myself. You know, always chickens out.
One of the main.
Well, I wasn't one of the main. I didn't come up with it, but it's that kind of thing of the Chris Vecco at Tasty was saying, you know, stop talking about it because the more you talk about it, the more it's going to sort of wave in front of him. You can argue, of course, and Peter Cheer was saying, obviously, with the market record highs, he's had the bill win, he's had peace in the Middle East, you know, peace in our time. Who said that before? And so he feels emboldened. So he's gone back to tariffs, his favourite subject, his favourite word in the whole world. Yeah. And so you can see why perhaps the market is underpricing it. That said, the last 2 months have been tariffs, scary, scary. Actually, no, we're not going to bother. So there are your two alternatives.
And as you say, ironically, that is emboldening him, and he now thinks the markets approve of tariffs.
Yes, there was that, I think they like tariffs because the markets are record highs. And then, yes, you can see how the logic works in his brain and how he got to that conclusion. So, yes.
So maybe he will.
But the thing you have to remember, maybe it's not, famous last words, it's not going to be, I think, another April because the market has seen it. The thing about April is you and I were literally there at the time. It was the Wall Street Journal says it's going to be 10% everyone, job done. And everyone was, okay, that's fine. Yeah. And then suddenly the big board came out and it was...
And it rose all the way to 5,850.
Yes.
Where were we now when they thought it was going to be 10%?
Yeah. And then the big board came out and everyone, then the smelly brown stuff hit the big spinny thing, like one there, and everyone panicked. But now we know what the figures are supposed to be, the tariffs, they're being much more trailed. And the market is not beginning to learn to live with it, but just adjust. And yes, it's a high tariff. But if the markets are very good at learning to live with this, aren't they? At taking it, digesting the information, pricing it in.
So let's just remember that you're talking about markets as if this is a market that we've known for the past 100 years. It's not. This is retail. These are people that are buying stocks because they think there is no downside, because when the market goes down, it goes down for 5 weeks, 5 days, and then either the politicians come in and save it or the central bank comes in and saves it. So last week was actually one of the biggest selling weeks since 2008 for institutions.
Institutions, yeah.
And the S&P was up 1.7%.
Yeah. So this is the...
So markets aren't sniffing anything out. Retail think they are bulletproof and keep buying it. That's dangerous.
Or retail have decided that for whatever reason, you know, the history, you can suffer volatility, but it always comes back again eventually.
Well, but it's this eventually, right? That is now 5 days.
Potentially. I'm not saying it can't happen. I'm not saying that there is no chance of anything bad happening around the 1st of August. You just have to think about how the market really has begun to acknowledge this, and people are looking at it and saying, well, okay, there is the risk. Maybe it goes down 5%, 10%. Maybe it has August to September. But if the flows hold up,
well, that's what I'm saying. It's the biggest selling that we've seen.
Well, institutions. But if the institutions then have to start, because this is the thing about the monthly fund manager surveys, were that everyone ran out of US assets in April. You know, it was their classic, the market is a room with a very small door that everyone needs to get through. Yeah. And now they're piling back in again, and they're still, and because there probably is no alternative.
They've been piling back in for a good 6 weeks.
Yeah, exactly. But if there's still more to come, and if earnings, again, we're now on earnings.
When you say there's more to come, for me, there's only negative things to come.
Well, but
because the US is slowing. We're not in any doubt about that, are we?
Right, but we've been but you can bang the drum on bearishness all you like, and it's more exciting. But it is more exciting, and
it's just what's going on in the world.
Yeah, but there's always something. We can always find something, a reason to be negative about, to worry.
But we're not always at all-time highs while we're doing it.
Well, maybe but all-time highs beget fresh highs. That's what the lesson of the last 100 years as well. It's undeniable.
They've given you a...
Now, the one thing I think is the slightly thing that markets aren't pricing in is obviously Powell over the weekend. So maybe the story isn't really tariffs, maybe it's power, because again, it really looks like a concerted effort to
get rid.
Because now it's the renovation of the Fed building. So he's lied to Congress. There's a really good piece mentioned John Author's morning note from Bloomberg about the head of the European Bank for Reconstruction and Development in the early 90s. They spent more money on the headquarters than they did on Eastern Europe, and he was outed. They spent more on marble, apparently, than spending money. So this is the way. It looks like there's a concerted number of people at what was the Housing Association weekend said, we're encouraged by rumours that Powell is considering resigning. If I was Powell, I can't be bothered with all this. But that's the risk.
Yeah.
An attack on Fed independence, he might spark the fire that looks a bit like April. This is the thing I think the market is, because we're all going tariffs. Actually, if it's Powell, and even if it doesn't really change policy, it's enough to say, okay, the Fed's now under the president's thumb like everything else.
We actually had a discussion in the one of the group chats that I'm in, the traders, over the weekend on what the market reaction would be if Powell was to resign.
Yeah.
I mean, what do you think the market reaction?
Well, and again, this was also the email from John this morning at Bloomberg was saying, if you look at Turkey, it's not a great example, if you look at Turkey, equities quite enjoyed the whole nuking of central bank independence. But obviously bonds don't.
Are we really using...
The Turkey, small economy, not important, US.
Yeah, wonderful democracy, Turkey.
Yeah, so it would be very different. I expect you'd get quite a bit of a panic, because it would inevitably start probably with bonds this time and spread to everything else. And it would be another kind of shoot first, ask questions later.
It's also had a very stable currency.
Yeah, famously, Turkish lira.
Yeah.
So
Especially in the last 10 years.
Yeah, so that's perhaps almost more of the risk at the moment than the whole tariff letter stuff.
That's aggressive. On the chat, they're saying it sounds like Chris is full of bull today.
Yes, well, same as every other day, really. But markets are record highs. What are you going to do? In the Dow?
No, I've read that wrong. Sorry, it sounds like Chris is the bull today.
I'm always the bull.
My eyesight's terrible.
I'm always the bull.
Right, front page of the Financial Times. What have we got there? Well, it's German politics. It's funny because they haven't used his name. They've changed it to German Defense Minister. On another headline I read, it said, Pistorius calls on weapon dealers to deliver. And I thought, oh, what's he been up to again? You
can hear producer Phil weeping into his cornflakes over that joke. But yeah, so some sub-editor is coming and going, no, I think you probably want to change that. So
Boris Pistorius has told the Financial Times his government had addressed long-standing industry concerns, but they need to start increasing production. These tanks and drone manufacturers in Germany need to take a leaf out of their...
You are skirting everything. The problem for industry is going to say, but we've been waiting for years for you to increase defence spending, and if we retool up now and we produce, it takes time to build an assembly line, and then in 3 years you go, actually, you know what, we're not so bothered about defence spending. Then you've built this shiny new production line.
Just get Volkswagen to do it.
And...
Well, it's not as if car sales are going through the roof.
Well, yes, I mean, but if industry changes around and then a new German government decides it's not sticking in defence spending, then they'll be left holding the bag. So you can understand why industry is saying it's a two-way street here.
It shows you how old is that tank that he's got in the background there?
Well, this is the thing. Obviously, the Bundeswehr, the German army, which obviously in the Cold War was second to the US, the whole NATO was pivoted on that the Bundeswehr would stop the USSR. And now, because they spent so little on defence, all the stories about German helicopter pilots had to have private flying lessons because they weren't getting enough time in, their submarines leaked, there weren't very many tanks, they were cannibalising all their parts. So when the Americans say, you have to step up here, we're fed up of picking up the bill for Europe because we've got China to worry about, you can understand. So always what I've said is that when Trump bangs on about defence spending, he's not wrong.
Boise, we just had a follow-up question. If Powell goes, does it mean rate cuts sooner? Absolutely, because then the government is in charge. Trump is in charge of setting rates at that point. He's just got a puppet at the head of the Federal Reserve doing it for him. But bonds collapse. And because bonds collapse, the world financial system is at risk. And I said I would still sell the S&P down 8% on that announcement. I'd be hammering it. I think we'd be down 25%.
If it was a resignation runners of departures are firing, then I think markets would take it very badly.
Oh, any resignation is cause of Trump, right?
Yeah, yeah.
So,
And the market is pricing in a slightly more dovish Fed from the current implied Fed funds rate if he goes. His scheduled departure is May next year. But then he's a useful whipping boy for Trump, isn't it? Actually,
of course, yeah.
You keep him in, and you can still whinge about him. You don't have to do anything, which is Trump's favourite mode of working.
From Trump's point of view, to play devil's advocate, I can see exactly what he means, as in, you can save me $600 billion by just cutting rates. So why don't you go ahead and do it, ignoring everything else?
Yeah. And Powell's response will be, well, if you hadn't embarked on this tariff nonsense, I would have done by now.
Yeah.
But because of this, I can't.
Yeah.
We're still waiting. Look, the China data overnight, the trade data, the surplus increased the US, so they're clearly exporting more to the US again.
Let's just take a quick look at that while you're talking about it.
So that's why Chinese equity is fairly solid overnight, because they're taking good news from this. Now, is it, again, you with Mr. Bear in the corner here will go, is it front running?
Mr. Cautious.
Yeah, Mr. Cautious, fair enough, whatever you want to call yourself, Mr. Underperforming Trade of the Week so far this year. If it's front running, should have done what Axel asked you to do.
No wonder all-time highs.
If you're front running this, trying to get it in or early, then obviously that's a worry. Now, you could say it's just things are returning to slightly more normal period because you had the two biggest powers in the world not trading for a while, and now they're going back to it. So if it's slowly winding back up again, that's a good thing.
Yeah, that's a very encouraging number, isn't it?
Yeah, I think you have to look at it properly and say nature is healing, I think is the phrase we're looking for here, that things are getting better. So that's why the Chinese markets, the Hang Seng was up again overnight. It had a really strong rally last week and finished right back at the lows, which is a bit worrying, but it's come back again.
Oh, did it? Shall we?
Well, last week it had I think Friday was absolute surge on Hang Seng. We got as far as 24,500 and then knocked right back again, and now we're just clawing our way back up again. This is interesting because it's fairly steady.
Right, there's the 1 hour chart.
There was your Friday move. This either Hang Seng or the A50. So there was Friday's rally, and then they played whack-a-mole with it. Really smacked it down hard.
They really did, didn't they?
We'll see.
Okay.
We'll see.
But more generally, this is the local shares in China. That does look a decent chart, doesn't it?
Yeah. And if you think maybe the Chinese are going to have to think about easing stimulus, there's even reports that Xi Jinping will be replaced. It's more than a sort of undercurrent of rumbling that he's not.
This Who goes first, Powell or...
Exactly, the Kremlinology of, I can't get the word out, of Beijing, of who's at the meeting and who wasn't seen in public for a while, because if you don't see someone in public for a while, does that mean they've been pushed off their perch?
Yeah.
So there's rumours that Xi is, because he's become maybe too hawkish, there is a more cautious element with the Politburo, and also might look to maybe, they're looking at the economic reform and saying, if you clamp down on this too much, you're going to kill the goose that lays the golden egg. And obviously the Communist Party needs to ride that tiger. Sorry, I'm using too many metaphors. Economic growth, if people think the economic growth is suffering, they're going to get particularly unhappy.
The Communist Party needs to ride the tiger.
Yes.
That's
not kill the goose.
And not kill the goose.
Is the goose on the tiger? I don't know. It's hard.
Right, before we go to chart of the week, we're almost there. Jürger in the chat, our German expert on the ground, saying, German bureaucracy.
Yeah.
Yes.
How is the railway network in Germany? It's even worse than. Apparently, some experts came over from the UK to help the German railway network. They're in that.
Wow.
It's interesting because about 5 years ago, there's about 3 or 4 books about how the Germans do everything better. That was the kind of the peak moment just as Merkel left.
Right.
And since then,
yeah.
Look up Tempelhof Airport and the renovation there, because that's a UK.
Hello, you can book a slot to go through security without any queues. So, I'll take that over how many cappies there are. Right. Yes, like and subscribe, please, people. We're up there, 1,230. But we're very close. If the Bitcoin price, 100. If we multiply ours by 100, then we're in line with Bitcoin. We want to stay above the Bitcoin price at 123,000. So yeah, so give us a like, give us a thumbs up. Thank you very much for the 120 of you that are watching right now this very fine morning. I want to see which one of you recognize a chart the quickest, because we are going to our chart of the day right now, and it is an EU stock. We don't do many European stocks. So get your European heads on. Is it French? Is it German? Is it Italian? Are we ready? Fastest fingers first in the chart. 3, 2, 1, go. Very smug look on my face. I managed to get it. I did.
Was your normal face?
Well, yeah. Some people have a resting bitch face. I have a resting smug
A
face.
disappointed resting face, apparently.
Yeah, that's right. I said it must be a luxury. Must be a luxury. I was of the same thinking as Maturin and Shrimp Fred, and I must admit, Phil then gave us a clue because he went, well, I guess it's a kind of luxury, maybe not clothing.
Yeah.
And got it.
it.
It is Porsche.
Can we have a special mention for David Boyce, who said it looks like Vodafone? I'm going to think he gives it. He would get
That didn't go down well.
Brave prize of the week. I liked that comment. It's my favourite one so far.
There it is. I must admit, I would not. Last time I looked at Porsche was in the 80s. That is
The 1980s.
the 1980s. Yeah. That is real value destruction. You called it, didn't you?
It is. Yeah, it's wonderful, isn't it? It's. Why did it go up so much out of the pandemic? It's really interesting, because it went from 60 to 120 right out the gates at the end of the pandemic. Everyone was going to go start buying Porsches.
No, it was. That was when Volkswagen sold part of it.
Right. Okay.
So it was a sort of technical
About
thing.
sell the news. There you
So
go.
right, there we go. We are open.
There you go.
That was lackluster.
Well, it's a Monday. There's not much going on.
Oh, but we are straight open though. London Stock Exchange were ready for this Monday. They are up and running straight away. We've got Carnival is one of the biggest losers there, down 1.7, as are Wizz Air and IAG.
You nearly called it BA, didn't you?
Yeah, British Airways, yeah. So the travel stock's getting hit quite hard there. Let's see if there's anything on the upside. Yes, there is. Whoa, what's happened in the Pru?
Asia optimism, maybe. There's China trade data.
Yeah, Standard Chartered up as well. Must be, you're right.
There you go. There's my money for the week. I've given you a reason.
Yeah.
Sounds plausible. Doesn't have to be true.
And HSBC also up 50. So the stocks with Asian exposure in the finance world are leading the way this morning.
And obviously, Fresnillo, silver, all that glisters is not gold, it's silver.
Silver, we'll come on to that. We might look at that in fast markets.
Good idea.
Take a look at silver. So, everything else relatively unchanged there. Pru given some of it back. It seems a bit of a markup. If I was long Pru, I would top slice there, I think, up 1.8 on the day.
We're not going to have our argument for the third week running.
Not if I was
bored now.
It's a long term. ITV down 1%, 79. Great. Love Island and women's football. What a showing from ITV. I mean, what did you choose between, Chris, last night?
I never watch ITV. I grew up in a house where ITV was the other side.
Really?
It's having older parents, it's that kind of thing. But yes, what's on the other side? Do you mean ITV? Yes. Bless them. Pru is up 45% this year.
Yes. We
admittedly, it's had an awful 2023 and 24. So
45 is really going some, isn't it?
We went from 13p to £13 a share to £6. Nasty.
Right, AstraZeneca also leading the way up 1.6.
Do we have a drug approval from them this morning?
And then the miners have finally got some steam going as well. Rio's up 80 basis points in Glencore. Sorry, go back to AstraZeneca.
AstraZeneca had one of these impossible RNSs with loads of complicated words in it, but one of its new drugs met its primary endpoint in the trial. Okay. There's no vowels in this RNS. It's just it's a Scrabble. Someone's just thrown the Scrabble bag at it. But yes, positive results from its blood pressure trial. There's a clinically meaningful reduction of blood pressure compared with the placebo. So there you go. Sell well, shouldn't it? Especially around here.
Right, let's go and look in Europe. What are we seeing in Europe? There it is. Porsche. Need to update that chart. Down it goes, down 2.4%. Lufthansa as well. The travel sector is really getting cut.
We looked at travel a while ago, and it said actually the summer is perhaps paradoxically not a good time to buy travel stocks. You wait until after September when they start announcing numbers and they start to do better. I'll dig out the numbers again, but yeah, that was what we looked at.
But is this tariffs? Are stocks actually going down on tariffs?
No, it's something else. It's got to be something else.
Mercedes-Benz down 1.5. Gucci getting thumped again. So after reaching a high of 206 euros, it's now 195. We've got Adidas down there to 205 as well. What about on the upside? Are there any winners? Not really.
Rheinmetall is just pinned permanently to the top of that, isn't it, really?
Yeah.
But then this morning, good news.
It really is.
Is it just that, again, to go back to flows, because everyone, I say everyone, there was a big flow into Europe out of the US because it was, oh no, we can't be in the US because of Madman in the White House will buy European stocks. Now it's, we remember they're rubbish, aren't they? So we need to buy US again. So is that partly what that is? It's just a flow of people going. Well,
there's no flow yet, right? Because it's 3 minutes past 8. But
okay, in the broad brush term, in the broad brush view that we've had a big rally in Europe, but people now, if we think stocks are okay again and tariffs don't matter, we debate that again. But then we go back to what we had before April, which is just buy US. Is that kind of what we're seeing in European stocks over the last few weeks?
Let's have a look at the futures and how those have done their since.
Answers on a postcard on that one, please.
FTSE's actually up.
Yeah.
So that's the safety.
And of course, a record high. When do we get 9,000 soon? When do we see 9,000 on the FTSE this
No,
week?
we didn't see it.
No, but when do we see it? When? Should we see it this week?
This afternoon.
Yeah. It's only 52, 51 points away, everybody.
That's it. They're hiding in the FTSE. AstraZeneca is certainly helping that this morning, as are those Asian insurers.
This is a weaker sterling as well, maybe helping a little bit on that front.
That's, of course, the weaker. Yeah, good, very good point.
Oh, I've made 2 good points already. It's only 8 o'clock. There you go. It's a very good week.
So, right, commodity world. Let's have a look at those. We've got little change in oil. Gold's going. Gold is going 3,369 trades. So people are remembering that headlines about tariffs are actually bad, and as are ever-expanding debt.
Yes. Yeah, I think the deficit issue is still the problem. Longer term. But silver up 1% early trading, so there you go. And natural gas 4% higher this morning. So what's driving that?
And then copper settling around the $5.58 a pound. Okay, well, let's have a quick look back at the FTSE and see how it's all settled.
Yes,
definitely.
Another couple of points higher, yeah.
They like this AstraZeneca. That continued to be strong. The Pru's dropped back to 930. Then we've got the miners, around that up 70 basis points.
Yeah, again, maybe China, more trade, good for the economy, good for demand. Maybe it's a bit old-fashioned view, but yeah, I suppose it's...
Yeah, of course, Chinese exports makes absolute sense. And Diageo back above £19. That's good to see.
There's a value trade there.
And then on the downside continues to be WH Smith. Hadn't seen... with the airlines, because it is now just an airline, really, isn't it?
Someone should buy it, shouldn't they, really?
Yeah.
IAG to buy WH Smith, that'd be fun.
That was a joke. Don't
Makes
start.
Synergies.
You already started the tackle thing.
You can offer, then you get discount. If you buy a BA ticket, you get a discount at Smith's or something. I don't know.
That's about as likely as my Tesla to buy Apple.
Well, there you go. We should do fantasy M&A every week, shouldn't we? Really?
Do you know what? Let's do one of those in 8:15.
Fantasy M&A, yeah.
Yeah. Okay, so at 8:08, that's our markets off and running for the week. But what are the things to focus on this week? Well, Chris Beecham puts a wonderful preview out on a Sunday afternoon, and this week you highlighted that we've got numbers from EasyJet, we got numbers from Ocado, but also we've got quite a lot of trading updates, don't we?
Yes.
In the UK.
Busy week, yeah. We'll come to the US in a little while, but yes, it's one of those. Last week was empty, and then this week everyone is reporting again. So you've got Burberry scheduled for the end of the week, EasyJet, Dunelm, Premier Foods, SSE, Frasers Group. Say Frasers Group for me.
Frasers Group.
Thank you. Experian, Barrett, Redrow, Rio Tinto reports tomorrow. Yes, loads of UK companies with trading updates, which of course people always moan at me because we put these trading updates in the week ahead and then sometimes they don't happen because of course they're not. Trading updates are never confirmed. I'm looking directly at the camera here. They can move, but that's what we're expecting this week.
But yeah, if you've got positions in any of those, just beware. There is quite a few large UK companies trading updates or numbers this week.
They always move more on trading updates, don't they, really, than results, because you get the one line that says, it was quite a good year, actually, thanks very much, end of RNS, and then the market goes
haywire. So you can't even be negative on your trading update.
No, well, then also they say it wasn't a very good year and the market panics. So it's always the one line of trading updates that where you don't get much detail, where you tend to get the volatility.
Always the headwinds from tighter fiscal, tricky costs from national insurance, from higher interest rates for longer.
Or if you're a retailer, it was either too hot or too cold. One of the two. Just delete is appropriate.
Which one is it? It's too hot just now, isn't it?
Yeah, I think it's too hot, so people weren't buying. I don't know.
I did want to take another look at Wetherspoons because I passed another one at the weekend and it was absolutely rammed. Now, okay, Rich, it's summer in the UK. Of course, Wetherspoons is busy, but you know they are charging £4.50 a pint.
Yeah.
And not the £12 like Wimbledon.
No, exactly. And they always have decent selections of beer in, actually, compared to a lot of pubs.
Yeah, I'm not suggesting we go there for our
too late.
writing, but I am. I can't imagine things are going badly for them unless it's at the cost line. The national insurance moves would probably hit them, wouldn't it?
Yes. Oh, yes, because that's the report. I think it was in the Times this morning about hiring.
Yeah.
Is Rachel Reeves has, blown up the economy, and then is a loss to understand why things aren't going well.
And that's why you see this move down here on the announcement of that national insurance. So that took them from £6.95 down to £6. But that is that's a really impressive. Are they up 50%?
Year to date?
No, sorry, since the April lows.
From about 560 to 770.
46%.
Yeah. Very good.
Yeah.
If you were brave enough to buy Wetherspoons on tariffs.
So yeah, so that will be an interesting one. That's the one, when we talk about weather, that's the one I've got my eyes on. But we will talk about more of this, like in fast markets, coming up in a couple of minutes' time. We're also going to, excuse me, look at US earnings season, which kicks off this very week.
Exciting.
As well, let's hear your fantasy, Emily. What's the most bizarre takeover that you can imagine, but you actually think has got a little bit of good thinking behind it? I think Tesla should lever up and buy Apple, and Chris thinks that one of the airlines should buy WH Smith. What do we get from you guys? Let us know in the chat, as well as when you've hit that subscribe button, because we got 125 of you watching right now, a fast train all the way to subscription
junction.
We'll see you in 2 minutes.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash. Welcome back. It is 8:15 on the morning of Monday, the 14th of July. Welcome to Fast Markets. Slightly different today because we are celebrating the launch of our brand new podcast, The Art of Investing, which you won't find on our YouTube channel. You'll find it on IG.com YouTube channel, but also producer Phil is going to pop the links back into the chat there. You can listen wherever you get your podcast, Spotify or Apple or Amazon. But the idea behind it is we are running a model portfolio on this podcast. You can find out what the geniuses of the UK, that is Chris Fellingham and Mark Holden, how they would structure their portfolio, which will be launching either this week or next week, depending on how long it takes them to do their teaching on what a portfolio, the theory of it, how it looks, how you set it up. But we're going to jump ahead here and we're going to ask Chris Beecham, how would he structure his portfolio?
Oh.
So I'm going to give you 6 asset classes. And
Right.
first of all, we got to get it adding up to 100%.
Oh, that's tricky.
But how would Chris Beecham have his long-term portfolio structured at the moment? And we will give you equities, bonds, gold, Bitcoin, cash, and then what's your secret sauce? It is the art of investing after all, so we'll give you your signature piece.
Okay.
All right, hit me with some percent.
How long are we holding this for?
And this, you guys all play along at home as well. This is your ISA, it's your SIP.
My retirement.
It's your retirement, exactly. Your target is 10% a year, or to beat the benchmark, which is the art of investing portfolio.
Oh, right.
So, we want smart on the risk side of things as well.
It's got to go 10% in Bitcoin.
10% Bitcoin,
Why not?
like it. We're starting at the lows.
70% in equities.
70, punchy at all-time highs.
There's some markets. Well, I'm holding this for the next number of years.
What market's not at all-time highs in equities?
The Russell 2000.
Is that where you'd have your...
No, I wouldn't touch it with a barge pole.
Exactly.
Yeah, 70. So what do we get? So that's 10. I got to open an Excel spreadsheet. This is how exciting this day gets, really. So what have we got left?
So you've got, so far, 10%...
5 in bonds and gold.
5 in bonds and 5 in gold.
Okay, so that leaves me 10 to play with, doesn't it? And 5 in 2 or 3 in cash.
Okay. And then your little signature piece.
Oh. Chinese real estate or something mad. I don't know.
Okay.
Yeah.
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 Nice. Okay, so that is 1893. So you got 7%.
Have I?
Yeah.
Oh, we'll chuck the rest in equities and let's be done with it.
So 75 in equities
Yep.
and 2% in Chinese real estate.
Yep.
You going to go and buy something over there?
Yeah, why not? Retirement house.
Right, so that is oh yeah, property. Jesse is saying property. Do you want some of that in a REIT or okay.
Yeah.
Shall I take your equities back down to 70 then?
Yeah, yeah. Let's trim our allocations.
Thank you for that, Jesse. Right, property. So 5% in
Coming to silver, Monkey Man. We're coming to
property.
Silver. We'll do silver in a minute.
Right. God, I'd be so different.
Go on then. What have you doing?
Well, I've pared back on equities, as we know. So I would go at this moment in time 40% equities.
Right. You're much older than I am, so you've got much less time to retire. About 2 years in it.
30% in bonds.
30? Oh, how boring.
15% in gold. Yeah, 10% in Bitcoin I would go as well. So that's 95. And then nothing in property.
Okay.
And then what would my signature piece be?
You're not having any cash. You're not
that?
holding any cash at all.
Yeah, I'm just trying to decide what would be my pièce de résistance. Oh, Vodafone, of course. 5% to Vodafone. I don't need any cash. Cash rich. Right, so that takes us through. Donny 1 is 60% equities, 20% gold, 5% Bitcoin, 5% cash. And
you've not criticised him for gold at nearly record highs, and yet,
Boyce's still trying to get back on side with me. He thought you were my dad.
Nah, it's too late. Don't try and don't weasel up to him, boy. Stick with your Vodafone thing. It's fine. Be brave.
Good. Right. Yes, we'd like to know. You can, if you want, you can put a handbag in there. You can put an Aston Martin in there. Whatever you want to do. Oh, your little signature piece.
Stamps or something.
Stamps. Yeah. Let's see what your breakdown would be. Put your dream portfolios up there because, those Discord. What do you call somebody on Discord? A Discorder?
A Discorder.
Yeah, a Discordee. They are definitely hyping up the idea of a competition in which producer Phil is getting hyped up to outperform the Art of Investing team.
Tune back in 40 years' time and we'll find out how everybody did.
Right, silver, let's go. Let's take a look at this because my group chat is getting very excited about the prospects of this. Let's take it shall we go back to a weekly chart on silver? Geo is our specialist and he thinks that this can go to 240.
$240.
$240 so at the moment it looks like a gold price there, 3,897, but we are talking $240. This is $39 as we speak.
Goodness me. Well, we like a punchy target.
What's your thoughts on silver as a whole?
Well, it gives you a bit more of an industrial exposure, doesn't it, than gold does? So maybe you can argue for it's a beneficiary of growth anyway. You've got to ride the volatility with silver.
Yeah, why is it more volatile?
Less liquid, isn't it?
Yeah,
it's just less traded in the same way. So it's if you're bored with gold, you go with silver. Because I remember trading silver around 2010-11. It was the weekend they killed Osama bin Laden.
Right.
And it went absolutely haywire, and I made something ridiculous in the space of a weekend. It just roofed.
Why did silver go haywire?
I don't know. I don't get it. It went up. Never asked why. It just did, and that was it. I thought, no, this is far too mad.
I admit I have never traded this on any, not professionally, not PA.
Yeah, it's very, very volatile. It's very easy to get your fingers burnt. Because once you get out just of gold and oil and the boring commodities, as it were, no offense to gold, it gets very, very volatile very, very quickly, doesn't it?
Now, from a historical point of view, take us through why silver is not gold.
There's more of it, essentially, isn't there? Is there more of it?
No. We used all our silver and used it for trading with Asia originally, back in the 18th century it would be.
Right. East India Company kind of thing.
Yeah. Oh. So we had used all our silver to pay them. So when it came to deciding what was the most important thing, we decided, well, we've got more gold, so let's say that gold is the
Really? Is it not partly?
Don't know the year.
Is it not partly all the great silver mine at, is it Porsche in the New World, and Spain imported so much silver that it just debased the currency? So that
really?
Yes, the huge silver mines that they just mined and worked everyone to death mining them, and then because they imported so much, it just ruined the Spanish economy eventually. There you go.
So yeah, the industrial material, absolutely, you're completely right. Much more heavily used than gold. More so than gold is jewellery. Therefore, that's why people have believed in it for so long. But it really struggles to pay those people off.
It does, yeah. Famously cornered, of course, in the Hunt brothers, wasn't it? Tried to corner the silver market in the 70s.
Yeah.
And it failed spectacularly. But that was the great story about silver. And ever since then, the conspiracy theories around silver have persisted, that JP Morgan's got loads and they're deliberately manipulating the price. You can very easily wade into conspiracies with silver pricing. But look at that run. It's fantastic.
Oh, this was the bit that you were involved in here.
Yes, it was around that time. I remember it was just that weekend. It was about an April weekend, I think it was. So it was then.
Which, of course, was, I mean, gold had a huge rally at that as well, but nothing to the same percentage. Because that was 100%.
Yep.
From September 2010 to April 2011. Wow. That's funny. I just really... I think it's because there's no big mining company that I've ever traded, you know, in LSE terms. Like there's, you know, Rio's BHP, Antofagasta, it's all copper. When I lived in Johannesburg, we were trading the gold miners. There was never really a big silver play, you know, Fresnillo obviously aside, which was always on the mid caps desk.
Yeah.
So yeah, views on it here, the chart being so beautiful as it is.
Well, a fantastic, absolutely fantastic run. I mean, it's one of those moments of if you're in it now, all well and good. Are you really? It's getting a bit parabolic, it has to be said, really. But and again, this I suppose is a function of the reduced liquidity with silver, that you really do get these dramatic moves. But then you can see it had an okay June, but there was a lot of buying, wasn't there, around that 36 level. Every time it dipped below 36, that was the price telling you, look at those candles going up. People were keen to buy. It just couldn't push it on, could it? And then suddenly,
huge,
off you went.
30%. Do central banks tend to hold this?
I don't think they do they?
No. So that's another reason for it being so volatile.
Yeah, you don't have that stability. So I think I'd have to look up the volumes to check.
Yeah. Okay, right, let's hear your thoughts on silver then. It does sound like you guys trade it a lot more than we do.
It doesn't surprise me.
And I guess in portfolio theory, nobody talks about having silver in there.
No, it's all about gold. And is it Buffett or Charlie Munger said it's apart from calling it the barbarous relic, because if you try and explain it to an alien that you dig this stuff out of the ground and then you put it back in the ground as a store of value. They famously hated gold, didn't they? It didn't do anything. It doesn't pay you a yield. So.
But I think that's before they gave central banks the keys to the castle and let them just produce as much of this paper stuff as they could possibly want.
So you're blaming the Nixon and the gold closure of the gold window?
No, sorry. I'm absolutely blaming Janet Yellen.
Okay.
100%. I think what she has done is negligent, if not criminal, from 2014 to 2018. Get that off my chest.
Yeah. You can take your soapbox away from him now, Phil. It's fine.
Okay, so it is 8:28 a.m. That means that Matt Arbour is on his way across the trading floor, and he's already here. Oh my goodness, we better get off. He doesn't like being kept waiting.
No, he doesn't. Let's not be rude about him if he's waiting outside.
Right, let us know. So we've got Steve Davies saying 10% gold, 15% property, 15% rare earth. There's the little signature.
Okay.
Rare earths. That's a good one.
How do you get the exposure
uranium
for that?
I take it back. Right. R6 Senna wasn't happy at me saying Vodafone because that's part of my equities. So I'll change to uranium. So therefore, I am 15% in gold, 10% in Bitcoin, and 5% in uranium.
Interesting. Could be fun. Could be fun.
Thank you very much for that, Chris. You've been better than usual this morning.
Oh, thank you.
A very strong average.
That's all I aim for these days.
Right, coming up next, it is Mr. Arbour and Angeline.
Goodbye.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
we're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Live from the trade desk with Matt Alba. How are you?
All right, Ange, how are you?
I am very good indeed. I had a very good weekend. I decided that I was going to try and cool off on the canals of Camden. Boy, was it hot. There was no air. I ended up being in an air-conditioned pub enjoying the cricket. How about you?
I'm all right, yeah.
What is also hot is the chat
Oh, good
on...
Lord.
Good Lord, yes. On, I was watching from outside. Everyone coming in with their perfect allocation with a 25-year horizon.
25-year horizon.
I know, right?
Has it come to this?
It has come to this. And then Beecham then chimed in, yes, of course, you know, for Richie Rich, it'd be shorter because he claims to be younger than Richie Rich. We don't know their ages. But Majorin coming in with equities, 40%, 20% fixed income, 20% crypto. Wow, punchy there. 10% soft commodities, 10% energies. Interesting.
Well,
What's a lot of energy?
Do you think 25 years ago we were at the height of the tech boom?
Yeah.
You think?
Yeah.
So it's interesting what you'd have had then that you'd have wanted to keep for 25 years.
Yeah.
I think you'd probably have made the wrong calls.
Yeah, well, it's a long time, isn't it? Stevie Davies coming in with 10% gold, 15% property, 15% rare earths. Interesting. Yeah, that's a really good call there, I think, because, you know, the hint is in the name. There's not much of it, and the tariff issues might mean that you could be on to a winner. 60% stocks there. So what is the safe arbor portfolio mix? Come on.
25. Well, I don't think I'll have any crypto in there because, you know, why change now?
Why change what's been working
over the past 25 years? Why change again? I think one keeps looking at American exceptionalism. To be honest, it's worked for the past 25 years.
Interesting.
Why think it changes? Of course, it depends. 25 years is a long time. How much do you want tied up in stocks versus cash? Bonds have not been great in your portfolio. The old 60-40 rules, but, you know, it's probably not been great for anyone over recent times. So I think you keep equities heavy. commodities on a
Oh,
25,
Richard's not going to be happy
25
listening to you.
25-year horizon. I don't think rare earths will be the future. I think we're moving. It's more sodium based. If you're looking at chip technology and energy technology, that rare earths are a minor stopgap whilst we resolve how to make superconductors using sodium.
Oh, interesting stuff. Maybe we should have a separate segment on this. I'm very, very interested to hear which players in the sodium side of things.
Well, because sodium, the point of sodium is that it's abundant, so that you don't end up as a player. It's the tech rather than the extraction.
Yes, I agree, but also disagree because there's some rare earths that cannot be replicated, not yet anyway. The ANG portfolio, if you're asking out there, is still very much based on US exceptionalism, just because that's where the liquidity is. 50% US stocks, specifically Mag 7, controversial, I know. 10% other stocks, and a lot of this in the sort of growth, anything linked with computing, data centers, because I still think there's going to be a huge amount of growth there in the next 10 years or so. 20% in UK property at the moment, trying to make that go down. And 10% gold and 10% crypto, although looking to make the gold exposure higher.
Really?
Yeah, is what I'm looking at right now. So that is the ANG
25
portfolio.
years in the heady 2050s, this crazy future hinterland. We'll still be into shiny things.
I am still going to be in shiny things. It's in my blood, darling. It's in my blood. Whether it's like, I'm now looking at, particular exposure, maybe in the, even like recycled gold, just because that you can't get, you can't manufacture this stuff, right? You can't manufacture gold. Yeah.
You're not into alchemy.
Everyone's tried and failed. Yeah, and we will talk more about gold. We have John Mayer, mining analyst from SP Angel, that's going to be joining us later. Yeah, my grandfather tried. My great-grandfather tried.
A long history of alchemists.
Yes, but they all failed. Do you know there's a gold, the Gold Council, which sits in Chinatown here in London? You won't know where it is unless you know where to look.
Okay.
Yes. Steve coming in on the chat saying, I'm not a fan of some of Trump's policies, but I think on rare earths, he's looking at crucial elements for the US economy to function as normal as possible. Also, there's a reason why Trump's looking at, Canada and wanting to make sure that they're first when the ice caps all melt, right?
Well, of course, this is it. The rare earths, it's not a case that rare earths are only found in China. There are rare earths, it's just extracting them is dirty.
It is.
And hence everyone franchised out to China, and that's why we've ended up where we are. But if you are that, you can do a bit of open cast mining and get your own rare earths in the US and in Canada.
Yeah.
Or in Greenland.
Greenland, yeah.
where the voters are slightly less sensitive.
Why do you think, Greenlanders have not said yes so far to the Chinese or the Americans, who are always lobbying to help them open up the ground? As you rightly said.
I think on a 25-year horizon, isn't it? The interest in a wild card play is Russia not actually the play over 25 years.
Yeah.
Change the regime in Russia, and you've got abundant resource. You've got populace. This is.
I love how you say populace as opposed to cheap labour.
Oh, come on, cheap labour. high levels of education.
High levels of
educated
yes.
populace, and historic innovation there. I don't know. I think that's the interesting one. If 25 years is that kind of. Okay, it's very difficult to invest in Russia still. So how you get that exposure is difficult. Some sanction busting, but that is a sort of wild card play over 25 years. That re-emergence, you see, Putin or his robot will run out of batteries within 25 years, and we have a regime change there.
Arsaksana, good morning to you, saying Bitcoin 10%. Yep, I'm with you there. 20% metals, interesting stuff. Equity 70% USA, UK, Euro, and India. I'm going to be quite controversial as well. I have been for a very long time a prescriber of the what's on your front page normally. So your CNBCs, your CNN Business, and your The Street. They tend to be Mag 7. So I've been in Mag 7 for quite some time. Get laughed at quite often by many people, saying that it's a bit controversial, that despite everything I'm still at the moment 75% big on US stocks, but I am trying to bring that down. What do you think of that? Controversial or not?
Well, less controversial after last week. Nvidia quietly hit the 4 trillion.
It did quietly.
Just
not many people
the
talked about it.
Yeah, because I think of the great market embarrassment of where it was trading in April, and it's an interesting one. DeepSeek's not gone away. The AI chimera. There's still lots of chatter around that. Okay, it affects Nvidia less. It's more for your open AIs as to how much productivity does one actually ascertain from AI. I certainly know last week I spent longer correcting AI's appalling output, where it tries to censor half the information I told it to contain from a document, as to where the productivity is this actually an illusion? Everyone likes to think they're using AI and embracing new technology, but how much time does it save for some of these tasks? I think it's an interesting one. Yes, people are still wanting Nvidia chips because there's a belief that if AI gets better, everything gets better. But at the moment, are we getting towards this point where, I suppose, lots of things, the emperor's new clothes, but what is AI actually doing in reality for a lot of people?
Yeah, that's right, trader friends. So if you're listening to this and you're liking the controversial views, then what I often tell people when they go, Ange, what do I do if I don't know which way to go, whether AI is going to be a success or it's not going to be a success? Then I would say go and make sure that you think about what will happen no matter what. So one of the plays that I have is the data center play, and no matter what, you're going to have, whether AI succeeds or not, or just becomes something of our everyday lives, data centers will still be growing in terms of demand, right? Think about all those pictures, think about all those tests that Matt and I are doing. Right? Something's got to crunch all his complicated, crazy questions. Luke Moore actually said that I broke Claude whilst testing it, because it just decided to go crazy and hallucinate for a bit, because I asked questions with lots and lots of parameters. But you're gonna need data centers.
You're gonna need data centers.
Yeah.
Well, there we go, energy stocks. There we go.
Right, speaking of energy stocks, we have had loads of questions on the chat this morning. Jugga saying DAX was overbought during the past few days. Now with the tariffs down, a word move just picks up speed. What do you say on the volatility side?
Well, the DAX was an interesting one last week, I suppose. Jugga Wednesday or Thursday, where the DAX sort of was the outperformer by a large quotient, kept on grinding higher to fresh all-time highs on very low volatility. And I suppose it's one of these things we often notice when vol goes so low. It is the gradual up move, almost to an exhaustion in the rally. So I think this week is quite interesting. We've got a better set of US numbers, something to actually give the market some tangible stuff to get hold of. I suppose less so in Europe, but that Germany has shrugged off all tariff talk, even to the extent to this morning. That's not a large change on a 30% tariff. A 30% tariff, of course.
Yeah.
It's
on EU goods. I mean, the market almost seems to smell of complacency.
Yes, the market smells of complacency.
That's a smell.
And and a determination to trade to fresh highs. It's sort of almost out of ideas as to what else to do.
So you've seen this many times before, Matt. What is the safe harbor view? Is it now a point where you
beware
can
August is what I always say.
Yeah, beware August.
Yeah.
You suddenly get a huge volatile move, and then will it then be a correction, then a bounce, then do you fill your boots? Is that the ploy? Where's the mood music saying?
Well, always history tells you that August sell-offs are buying opportunities. It's whether there is a paradigm shift there, as something changed, which is what the market kind of thought was the case with tariffs, that was a paradigm shift, that here is something that is going to change and is going to be around, that has a profound impact over the next 3 years of term. That wasn't the case is kind of why we are where we are now, because the market's discounted, global conflicts.
Yeah.
It's discounted, crazy ideas
Pretty
in
much
the States.
everything.
Discounted, exceptional amounts of borrowing in the US.
Discounted bunker busters. Discounted, all this talk of, tariffs, Tucker or not. Nothing seems to kind of make it budge. Let's cross over and look at the US 500 now in terms of volatility.
This is where volatility is sitting, rock bottom.
Yes.
Isn't it?
It's just absolutely crushed and doesn't seem to be ticking higher, anytime soon, even looking further out. You're still seeing the same picture?
Which is why, and it's I suppose the interesting story here is sort of, you look at the S&P 500 vol, the NAS vol itself is trading very low. At individual equity level, we're still seeing some extraordinary volatile days. There's my strategy has almost taken a step back in terms of high vol. That hasn't been crazy moves, but the Coinbase's Tesla volatility is still extraordinarily high. The reaction on every piece of news on Tesla is very high. Nvidia vol not so high, but has had this strong up move. Palantir vol has been high. A lot of those bigger names are keeping quite a high vol. Looking at that popular trade list, Robinhood is one that stands out. The move on Robinhood over the past month has been quite eye-watering. And it encapsulates that. Okay, no vol on the main indice, that the market is so risk on, but jumping on new stories or things to get hold of, tokenization being the thing that's driven a lot of this volatility and new future. Again, without even thinking, what does tokenization mean for Robinhood in essence?
It's like, it's new. Let's jump on that bandwagon.
Well, exactly. Here's another way to trade equities. Okay.
Is
that difficult?
Is this a sense of people thinking, okay, there's not much vol in indices, so we'll look elsewhere?
Look elsewhere. Exactly.
And is this driven by the retail side of things?
I think it's very much driven by retail.
We've seen that quite recently.
Yeah, and we saw it. I suppose we saw it on the way up. We saw gold. Gold volatility has come back off a bit now, and that's sort of out of the picture. And it's moving back into these single names, into sexy single names where you can grab hold of a story, something that sounds like the future or could be the next big thing, and that's what's driving interest here.
Speaking of which, let's take a look at Filtronic. This is one that I speak.
I would say Filtronic's a sexy new name. But
I speak to Luke, and I talk about this quite a lot. And interestingly enough, it's also been tipped in quite a few reports in newspapers, including I think it was the Telegraph, one of them. But the interesting thing about this chart is, we are at that point, just trying to zoom that in for you to see if we are near a breakout level. Let's have a look at that. We're very close. There we are. Is this one that your clients trade a lot of or not?
No.
Interesting. It's a interesting one because they've just announced a new contract win with a defense prime contractor. Still waiting on more details on that. And also Maturian, talking about this stock a bit, it's come off its earlier bounce, now up 2.5%, but I think it was up a bit higher. And Maturian also watching that for a breakout there. I also made an interesting graphic to show you guys because Filtronic is one that's had a big trajectory upwards recently. And a lot of time we talk about this on the trading desk, and there's this feeling that this is a play on SpaceX because it has high customer concentration risk. This is a good thing and a bad thing as well, with SpaceX representing significant revenue. It's got this partnership, 5-year partnership with SpaceX as well. more than £13 million defence contract secured for 2026. I've been looking at not so much the stock, I'm just looking for ETFs with Filtronic in, just because I don't know a huge amount in the stock, but taking a more sort of diversified approach. The other one that's been on the chat recently, a lot of auto stocks down today. Do you think this is just
It's kind of a natural reaction to tariff story kicking about again.
a bit slow though, a bit
Yes,
sort of
yeah, not much.
delayed reaction there?
Yeah,
Stellantis.
and auto has been a strange one in terms of how it's reacted across the the whole tariff period. It's never done quite what you expect it to have done. Stellantis. Yeah,
Let's take a look at Porsche as well.
Stellantis, I suppose, is one of those zombie car companies, isn't it? Where no one's ever quite sure about what it is they do and what the USP is there, or what the brand is. But it has a lot of volume.
Porsche's also down 2.3% there. Let's check in on Volkswagen as well, because that was down earlier. Yep, there we go. Volkswagen down around 1.5% there. Also elsewhere, I mean, it looks at the moment to be pretty much risk off for the DAX, but the FTSE.
Are we going to touch the 9,000? Have we touched 9,000 once we were on air? I thought it was going to happen on Friday.
No, on Friday there was like
we shied off.
Yeah, and the mood got kind of killed in the first half an hour.
Well, the FTSE was trending higher as other markets were trending lower. It felt like the FTSE was going to go for it, and
it did, didn't it?
And not quite. FTSE at 9,000. Wow.
It seems to be faltering somewhat. I know there were great hopes on Friday, and we talked a great deal about this. We come off my chart, please, because I'm trying to try and find you the moves there. But very rapidly was overtaken by all these reports about potentially more confirmation of tariffs and what exactly will be announced. It might come at the weekend. That killed the mood. Completely.
Well, yeah, I suppose it's that interesting thing with the FTSE where the mood music on the economy is sort of poor. I know the Bank of England is very much in an easing state as opposed to anyone else, but that's as a consequence of poor economic data.
Yeah.
But yeah, it'd be nice to see the FTSE hit 9,000, wouldn't it? I think we spent so long kicking around the 7,000, and the 7,000 to 9,000 move is probably the quickest high, or significant high we've ever seen on the FTSE.
Yeah, it's incredible. I mean, who would have thought? I mean, 4 or 5 years ago, we'd not even dream of being able to talk about this. Mature saying space should also be considered for a portfolio.
There's a ticker.
I feel like I'm already in Tesla, and my pension, that's kind of like space enough. But I'm in Jedi. I do know that ETF. It's got a great name. I want to be it just because it's
exactly. That's one of those where people are in it just for the ticker.
It's doing very well. I know it's doing well because Luke and I talk about that quite a lot. Monkey Man saying, Filtronic, aren't they a band from the 90s? Love it. Is that like kind of another song that sounds similar? Technotronic by Daft Punk. There you go. Marcus Kane.
Technotronic, a band on their own.
Are they?
Yeah.
Oh, isn't
so.
Technotronic like that really famous tune by Daft Punk before they disbanded? And anyway, Marcus Kane, back to trading. Don't see Bank of England dovish in reality anytime soon.
Yeah, I think the way UK economy is going, it's with the consumer demand is coming off the edge of a cliff. Bank of England being driven into cuts. It's there is not a lot of good news for the UK consumer. There's not a lot of upbeat talk for the UK consumer.
No. And do you buy into all these calls for Rachel Reeves to step down? Is that your view that she needs to be replaced? I know this is not a political show, but if she did,
better the devil you know, almost in the terms.
What would it mean for those trading cable? Because many people that trade this space still say, Ange, it's all about the weaker dollar. you know.
Well, it is that is the dominant story in the market. Although, yeah, the dollar play has been sort of interesting over the past few weeks. It's certainly the dollar hasn't been weak against the yen. It has been weak against the pound and the euro, or weaker. It's an interesting one in the UK. Rachel Reeves steps down. Who do you replace her with? It's markets don't like the uncertainty there.
What about Bill Blaine from Windshift Capital saying that he thinks it's got to be Yvette
Cooper,
yeah,
Bulls' wife. There we go.
Yvette, Bill Blaine says, is the one that has, the metal to push through taxes on the wealthy.
Well, if that's the drive, is that what sterling and bond traders want to see? I don't know.
Yeah. Marcus Kane saying, what exactly is the mechanical market's reasoning for a lower rate? Does anyone know? Question out there to the floor. Bank of England can only lower if the Fed does.
Well, I'm not sure that's strictly true. I think the Bank of England have been lowering for the past few quarters, and the Fed isn't looking to lower anytime soon. With a different dynamic there.
Yeah.
Yeah.
Oh my goodness! This producer Phil and James there saying this is what AI can do.
I was going to say how much AI time has been wasted here.
How much energy? How many data centers did it take to do that? That is an incredibly handsome version of you. I mean, look at that. It's like Trade Live on Sesame Street.
Well, it is, yeah. I'm glad you went Sesame Street. I thought there was a Muppet inference there. But,
Muppet? You think?
No, well, a Muppet. I'm taking the derogatory end of it. It's more Sesame Street than Muppets, isn't it?
Is that Chris Beecham, the blue face? Oh my goodness! Right, we are coming up soon. Counting down now to all sessions. And we are going to bid you adieu, unless you would like to stay.
No.
Because we are now going to go to a short break, but don't go away because this is the best part. To me, this is like the USP for IG. You can take a position in US stocks before the cash open. Hit the like and subscribe button if you would like to see more of Matt Arber's secret portfolio. And we've taken note, we're going to see how it does over the next month or so.
25 years.
25 years. I might not be here by then. All right, stay there, get your coffee, get your tea, and we'll be back with all sessions.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, trader friends, we've just been getting rich up to date with those AI pictures.
Fantastic. That's one of the funniest things I've seen on the show. That is absolutely brilliant.
Question is, why if it was Beachy head blue?
Yeah, I don't know why he's blue.
Right. Oh, all sessions, and we are out of the gate, people. Here we are.
Right, let's see then. With the US futures down 0.5%, what are we seeing on the open here? We got Boeing is the winner, but the losers are CrowdStrike, Moderna, Oracle, Caterpillar, all down around 1. CrowdStrike a bit worse.
Many of the car makers also lower, following Europe as well. Interestingly enough, some of the names that you like, Nike also down 0.75% there.
Oh, of course, but on the second tier, MicroStrategy must be doing well this morning. There it is, up 3.2. MicroStrategy up 3.2. And let's see what else is on the losers. The losers, Upstart, Alcoa, Snowflake, Plug Power. Where is
Well, we've
Palantir? Oh, down 15 basis points.
What's that all?
15.
Huh.
I guess it had a bit of it gave some back on Friday. But
We've got some upgrades and downgrades coming through in the last few minutes as well. Whilst I was talking to Matt Arbour, we've got Kingsdale Capital Group, JP Morgan raising the target price of that. Pretty quiet out there, though, it has to be said. Pretty quiet on the broker change front.
why are Boeing strong? Because of the India air crash investigation.
Well, I don't actually know, because that came out and was out during the weekend. The latest on Air India is that the Air India CEO says that the early reports show that there was no mechanical or maintenance issues with the aircraft or
Yeah.
engines. That's the internal
I
memo.
think it was out on the day on Friday. Wasn't it? Yeah.
Especially the bit where they were talking about how the two buttons couldn't possibly have been sort of accidentally pressed, right? There was a 2-step safety feature.
Okay.
So you had
stop it happening.
Yeah. I looked at it over the weekend. The geeky side of me wanted to know how difficult it was. You had to lift and press. So you
Yeah.
couldn't accidentally like bum shuffle and accidentally turn, and especially two, right?
Yeah.
Yeah. So it's
that's-
really bizarre.
Right. So General Motors down 80 basis points. But yeah, nothing really there. Ahead of this big week for earnings.
Yeah.
Then the banks, of course, start. Is it Wednesday we start?
Yeah. Late.
Goldman's, what a run they've had, though. And of course, all that IPO market with all the AI and, how strong tech's been, then you got to think their pipelines are looking decent for IPOs. And
Yeah. And what's interesting with the banks too is they're likely to, there have been loads and loads of reports out there saying that actually the numbers are likely to be good too, because they've managed to use this AI and been able to use it to cut costs in lots of different areas, cut the fat, really.
whenever I hear AI, I can't help but Dan Ives.
Oh.
The way that Dan Ives says it. AI.
Yeah.
So we're on that Tuesday. We've got Citigroup pre-market, JP Morgan pre-market, Wells Fargo, BlackRock, State Street, and across here, Ericsson. After the close, we have what do we got there? Nothing really after the close because, of course, banks. Then on Wednesday before the open, we've got ASML, Bank of America, Goldman Sachs, Johnson & Johnson, Morgan Stanley, and Sandvik in the mining world. And then after the close, Alcoa. Alcoa used to always be the first company to report, but that's
it's changed now. It's changed now. They used to kick off the party for the earnings. So it's always like the banks now kick off, and then we've got the big blue chips, and then we get the lesser known names, sort of like the B listers, and then just when you think everything's quietened down and you can take a rest, Nvidia, boom, comes onto the scene.
And then, for those of you that like trading after market, 9:15ish, then Netflix are on Thursday. So cancel your plans on Thursday evening and sit there getting ready to trade some Netflix.
You still have your Netflix account?
Still got the account, $12.99. I'm happy with. I think that's good value. I've been watching the waterfront.
Right.
So our mining expert is up and ready.
Yeah, we're going to talk about Sarabi Gold for Andrew McKilvey. We're also going to be talking about Ariana as well. When we talked about copper, and I caught up with John as well, saying that you guys are interested in silver too. You heard Rich and Chris talking about silver earlier on. So any questions, put them here. And also don't forget to slam the like and subscribe button, because John is back because you did so and asked for him to return.
And of course, copper. That's my big question as well. Copper.
Uranium.
And uranium. Oh, so many questions. Just one last thing away from the numbers, asking there live, MicroStrategy up so strong while SWC is down. Well, remember, SWC is right at the start of its journey. So it's now got the cash, or at least selling shares in the market, to buy up to 2,000 Bitcoin, and it's only got 1,000. So Bitcoin going up so strong, you know, he's still got to buy it. So it's not such a big positive for SWC as it is. You'd rather have flat. You don't want Bitcoin to drop, but you don't want it to go up quite as quick either. Whereas MicroStrategy having, was it 500 million worth. Is that right? No.
That sounds a bit too little.
So the market cap's 100 billion. Therefore, he's got 50 billion of Bitcoin. 600,000 coins.
600,000, just shy of it.
600,000 coins versus 1,000 coins. There's a bit of a...
It's also a really interesting week because skeptics of Bitcoin saying Bitcoin hitting record highs is just sort of like a correction is just around the corner, because the US Congress is likely to debate key legislation in the coming week, and that could be either way. So maybe could go either way.
I'm sure that's not one of the reasons that it's gone up, because people that are involved in that definitely don't know anything, do they?
No. The thing is, yes, they could push it through, but the thing is, if there's the expectation is so high that it's going to go through, that if there are any hiccups, that's what they're saying. That there's
Let's see
going to
what Pelosi's done in their Bitcoin. Good stuff. Right, on to John. I am going to go and run through and find out what Axel Rudolph looks like as a Muppet.
Right. Can you share that with us? It's really so funny.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Hey, trader friends, welcome back, and we are joined by the one, the only John Mayer from SP Angel. Hey, John, how are you?
Yeah, I'm good. Yeah, nice to see you.
And nice to see you too. I adore patching through to, because I see all these, amazing rocks and minerals behind you. Talk us through what you have behind you over there.
We got pieces of spodumene which contain lithium. Some very good copper samples, some very high-grade copper there, some tin. We collect different sorts of ores and cores from around the world. It's just stuff that we pick up as we go around.
I'd love to be there when your luggage goes through security and everything goes off. Beep, beep, beep.
We've had a few moments when we've been stopped and asked for our papers.
Speaking of which, I've got a picture of you in Zimbabwe. This is fascinating. All of our clients and our trader friends here know that you do a lot of traveling. What is this picture, and why is there a huge hole where there seems to be a bridge or a platform?
So this is on the Kavango mineral licenses, and this is an artisanal working. And in fact, the local guys who are, well, they're not quite digging by hand. They are using explosives. But they use this very, very rudimentary and crude, simple way of getting, of dropping into the workings in order to get at the gold. And in fact, these guys are really good miners. I mean, it's not the safest way of doing things, and it's definitely not modern. It's not a modern way of mining. But this is how it was done traditionally. It's a metal head frame. You've usually got a small motor, and that helps to, which is a winch. You drop people down into the workings, and they dig away. And a lot of it's by hand. And then once a day they'll blast because the rock down there is very hard. But they get a lot of gold out.
And are there lots of people hiding behind, and I can't see them, or is it really just like a one-person, one-man band there?
Usually they work in groups of 4 or 5. As you know, they work in teams, and they're very effective. So there'll be about 4 or 5 guys underground, relying on that guy at the top to get them out at the end of the shift.
Nice. That guy's got a really no pressure then.
Yeah, no pressure.
Right.
Well, these guys can climb out without the winch, but the winch is helpful for bringing up the ore.
Right. Let's move on to stocks and commodities now, because we've had silver really heading higher. Gold seems to have eased off a bit at the moment, but gold's still up 0.5% there. What is your outlook at the moment for gold? Are we still seeing this sideways pattern, or are we going to see a move, a breakout move sometime soon?
I think given Donald Trump's big beautiful bill and the likelihood of that to cause the printing of a lot more US dollars, and the fact that just about every other European country is likely to have to print more cash as well, we see gold breaking out on the upside. Gold is your hedge against inflation, and inflation is not going away.
In fact, looking likely to have even more inflation pressures, right? Upward pressures.
Yeah, if nations print more cash, and I think they've got to cope with the amounts of debt that they have, and the fact that interest rates are at higher levels than anyone had expected. So yes, ultimately that is inflationary. Whether you see that in the very short term is a moot point, because economies are struggling a little bit. But China's still growing, and everybody has to keep up. And part of the big beautiful bill is so that America can splash more cash and try and keep the pace with China.
So let's talk about whether or not one should lean into the fundamentals of this, or actually do you see more opportunities looking at gold producers, for example?
I think a lot of opportunity for gold producers, because, as I say, there aren't that many new gold mines in the world. The industry's been starved of cash for something like 12, 13 years now. A lot of explorers have been going, they've been forced to go slow. They might have good projects, but they've had to work on them very, very slowly. So the pace of new mine development is shockingly poor at the moment. And I think it will pick up, but we're just beginning to see the first signs of that. So, yeah, I think in a world where there's more physical cash, more paper money, people are going to look for hard assets. Gold, copper, silver, they're all good hard assets that people like to own. If you hold a bar of gold, you understand why you want to own it. So yeah, it's one of those asset classes that continues to do well. It performs in these times of uncertainty.
Let's talk about some of the names. Which ones do you like? I mean, there's Barrick Gold, there's Newmont. Which ones? There's also Newcrest. Which ones do you think have the best upside? For example, for those watching this space, thinking, well, I've traded the price of gold, but I want to look at miners now.
Well, we focus on the smaller companies. Barrick's not my favorite because, well, one, it's a very large company, but two, it's probably lost a key asset in Mali to the government. They've decided to seize that asset back, and in fact, they had a helicopter in there last week taking a ton of gold out of the vault. So that, I don't think that's being so well managed. Newmont would be a better play on the larger side of things. But there are other companies, gold, copper companies I would go for. In fact, Barrick did change its name from Barrick Gold to Barrick Mining to highlight that transition. But on the smaller company side, I think there's quite a lot of little companies to look at, which, as I say, have been going slow, but actually have good growth opportunities going forwards, like Ariana, like SolGold. There's quite a lot of these things.
And for those of you watching, if you'd like me to try and get some of these CEOs from these mining companies, do let me know, because they travel widely, and also they often come to London for the resourcing tomorrow. We used to be known as Mines and Money, didn't it? I don't know why they changed their name, John, but it's now resourcing tomorrow, I believe.
Yeah, well, there's a lot of competition in the mining conference sector. And there's the One-to-One group also manage conferences in London. And the original Mines and Money, I think, was a fantastic event. But it was very traditional in that everybody would troop into a room and listen to some expert speakers and occasionally myself. The format's changed. Everybody seems to want one-on-one meetings with the companies, and that's good. But once you've had 20 one-on-one meetings, it's quite difficult to remember the first one from the last one. So we prefer to actually spend more time individually with the companies. But yeah, they're good opportunities. If you pick 4 or 5 companies that you really want to talk to, I would say that it's a good focus. So use these events, use resourcing tomorrow, use One-to-One, and find out really what's going on. And for the thing about investing is always invest in a company that you trust and where you really believe in the management. That's the key bit, because good management can take a sort of a slightly rubbish asset and do great things with it. Look at Anglo-Asian Mining, the most fantastic management team operating in Azerbaijan. The assets were never first class, but they have done brilliantly with those assets. And in fact, they're expanding fast in the world of copper. going forward. So they've got a new mine that the government has asked them to develop a new mine with them. So I think it's a stock that will go up and up. I should say that we act as nomad and broker to the company.
Interesting stuff. We've got people chiming in on the chat as well. Fortet there saying another reason for gold to go up is that most of it has already been mined, at least what is economically feasible to mine. Do you agree with Fortet, John?
It's getting harder and harder to find the big world-class mines. So, yeah, I mean, Zimbabwe is a place where I think the next generation of new mines is going to come out, but nobody's going to throw billions of dollars at it right now. The government has a slightly onerous, I won't call it a taxation regime, but just a fiscal regime that companies have to work with. But it works. It's the gold assets are good, and the gold assets are developing in the right way. And in fact, the workforce is brilliant. As I say, these artisanal miners really know what they're doing. And you can't get that in lots of places in the world. You couldn't develop a mine on the outskirts of London and find a good workforce for it. It would be very difficult.
RSAC's also chiming in right now. And is it better to go for minus ETF? We have gold minus GBX or junior gold minus GBXJ. So that's a question for you. Do you have a preference?
Personally, I always invest in the underlying equities. I don't go for these basket instruments myself.
Interesting stuff. RSAC's, that is John's view. Also, we've got lots of people coming in onto the chat now talking about, top producing countries. Marcus Kane using AI there, saying, in 2024, China 380 tons, Russia 330 tons, Australia 284, and Canada following closely behind that, and the US. Yes, China is a big producer of gold there. Let's cross over to something that's been really hot recently, and that is copper. Right, so your outlook for copper, John. Lots of people here wanting to know what you think is going to happen in this space.
Before I start on that, just with reference to Russia and China, communist systems, when they start to run short of cash, they always use mining and resources, so mining and oil and gas, for revenue. They use it to bolster the coffers. And when money is running short, they forget to put money back into the mines. Mines will always fail if you don't continue to reinvest in them. We saw this during the Russian financial crisis. A lot of the mines effectively collapsed. And so this is something to watch out for. If the Soviet Union collapses financially, then those mines will start to fall apart and the production coming out of them will fail. Now, we don't see that with China right now, but it's always a possibility going forward. So governments should never run mining projects or mining companies. It's only real mining companies where the management is incentivized for longer term, shall we say, production that one should ever invest in. Anyway, going back to the outlook for copper. Yes. Yeah, look, I mean, the world needs a lot more copper because the world needs to electrify AI data centers. It needs to electrify everyone's electric vehicles. And there's an awful lot of houses that will need recabling as well. So there's no good substitute for copper, and that's an important thing.
Right, we have Rich McDonald here, who I know is very keen on copper.
Great to meet you, John. How are you doing?
Yeah, good.
I was especially interested there when you said about Anglo-Asian mining, and you're an expert in these smaller names. What would be your other names that you'd be particularly interested in at the moment that our viewers can get involved in?
Oh, I hate being put on the spot. Well, we're quite. Yeah, it's very difficult to remember.
I know you said you like Newmont in terms of a bigger sized one.
But if you could have anything.
Yeah.
Yeah, no. Newmont it's always been a class company. I mean, not to say that Barrick is a bad company, but it's just it's undergoing an unfortunate situation in Mali. But they also want to get involved with building a huge copper mine in Baluchistan in the north of Pakistan, which I think is going to be a very, very difficult thing for them. But there are other good players around. I mean, there's I tend to think of the mines more than the company names when I'm under pressure. But Resolute we quite like. But it's a UK and Australian company. They've been operating in Mali, but they have other operations.
And
and Sarabi. Look at Sarabi. They're a good little company operating out in Brazil. That seems to work well for them.
in terms of commodity choice, John, what order of preference would you put in where you think there's strong fundamentals in commodities?
Well, for me, I always want to buy copper. Tin is another one. Tin is a bit more. It's a bit more of a wild commodity because it's less liquid. It's less well traded. But it does that. You can't get tin from many parts of the world, and in fact, the Cornish tin mining industry. If we look at South Crofty, the old South Crofty mine, which is where I started my career.
Carlo Verda, knowing his tin stuff. Carlo Verda in the chat saying tin South Crofty. You from that region by any chance?
I'm not from that region, but that's where I started my mining career. So Cornish Metals is the company, and I'm very proud for the fact that we act as nomad and broker for them. So yeah, I mean, I'm really looking forward to the restart of that mine. There's lots of tin down there. There's no doubt about that, and they are getting on with it. They're certainly pushing ahead. They've been broadening the expertise within the team. And having that expertise is all important. And there are a lot of, they finished mining, and that mine finished at the end of the 90s. So there are guys around who know how it works. And the good thing is they actually started using some very new modern mining techniques in the last few years. So we know that those techniques work underground. It'll give us a very good idea on the economics going forwards.
Speaking of economics, you talked about copper earlier, and you said out of, Rich was asking you out in the order, which ones you would go with most. You said you really like copper, everyone should have copper. Do you like the fact, John, that copper, in terms of Chinese demand, has seen a bit of a bounce recently? I mean, is this just a blip, or do you think it's a longer term trend that there's going to be more demand from copper from now on?
I think there's definitely a longer term trend for more demand. As I say, electric vehicles and data centers are just two of the key drivers. But there's national grid systems need almost rebuilding. I mean, we all rely on electricity for just about everything we do these days. And if the grid network has to be robust. And yes, we have two-phase electricity that we all use. If you want to run a heat pump and an electric vehicle, you need three-phase electricity. That means you need recabling. So there's a lot more work to be done to make sure that consumers get the power that they're going to want going forward. Why
has it struggled so much, though? Because I know, Goldman's were talking about this in 2022, and we've been waiting for copper, and the only thing that's ended up driving it is a bloody tariff on top of it. Well, why is the surplus not been eaten away yet?
Well, the mining industry is always trying to grow. So we had about 3% growth in copper production last year. If anything, I think we're going to see a deficit by the end of this year, and in fact, we'll almost certainly see a deficit in Asia, because so much physical metal has been dragged into the US. That metal's gone to the US because of premium prices out there, largely on the back of Donald Trump's Section 232 tariff investigation on the copper industry, which is madness, let's face it. I mean, the idea of having huge copper tariffs between America and the rest of the world doesn't make sense to those of us who are looking at it. But it is creating this enormous distortion. And so a lot of metal that the Chinese would have wanted to use to expand their grid systems, to connect more solar farms, more wind farms, more nuclear power stations, is now in America. So they're going to have to work even harder to find that metal.
Yeah. To illustrate what Rich was saying, just showing up this chart to show you, the one thing that's actually caused, this copper futures to jump there, which is these tariffs. So overall, though, there's a lot of data points there showing that you'll just see all this additional cost being passed on to consumers. Is that your expectation, John?
Well, yes, I'm afraid it will be inflationary, certainly in the United States. And it probably creates a little bit of inflation elsewhere in the world.
Would you still go on the LME then, if for our guys that were looking at trading it, or the HGA's now COMEX is underpinned, or how would you play it? Or would you go for some of the smaller names that are leveraged into it?
I think Trump is going to have to unwind this tariff proposal. I mean, they haven't actually come out with what the real tariff is, but I think they'll have to roll back on it to a very large degree. So I would be buying the LME and selling COMEX, but that's
okay.
What do I know? I'm not a professional copper trader.
Yeah, and then what about the companies that are leveraged into this potential move if we do go into deficit?
Well, certainly they'll do well. Antofagasta, Rio Tinto, Glencore, BHP, they're all very, very well placed to benefit from this, and even Anglo-Asian mining.
So Anglo-Asian mining, is that sort of full copper, or what's the breakdown, John?
They are transitioning from gold to copper, partially because of the resources they're working on, and because of the new mine that they'll be restarting next year. So what are they going to be? They'll end up 2/3 copper, 1/3 gold, I think, in the next few.
And that's with new production coming on next year.
Yes, yeah. I'm kind of making a bit of a guess. I'm not the analyst on that stock, but it's definitely going in that direction.
And then what about generally? So obviously BHP tried to take a grab on Anglos for their copper. Do you think there'll be more M&A because of the outlook of over the next few years, and what a struggle it is to get production online?
Well, what we see in the industry is if any new copper project comes along and it looks like it might turn into a world-class project, it gets acquired very quickly. And we see this time and time again. So it's important to, we've got a team of guys looking around the world trying to keep an eye out for what's promising in this world. I mean, not just copper. We're looking for gold mines, tin mines, silver mines, that sort of thing. But that's where the money's made.
Just switching over to platinum, R. Saxena asking if you had any thoughts on Sylvania Platinum.
Yeah, it's an interesting one because hybrid vehicles have given PGMs, platinum, palladium, rhodium, ruthenium. It's given them another lease of life. We all thought that electric vehicles would really see the end of these sorts of auto catalysts, but actually it's not working that way. Hybrids are working well for now. Electric vehicles have still got a way to go before they beat hybrids in terms of many performance metrics. So it's definitely PGMs are going to do well for a while, and because of the situation.
What is your duration? Because there was this expectation that it would do well, and then Trump 2.0 happened, and then it pretty much took its foot off the pedal.
Yeah, I mean, certainly while Trump's in power, they're not going to be pushing electric vehicles in the States, and in fact they tend to drive bigger mileages in the US anyway. So EVs have got a way to go before they really crack the US market. And let's face it, petrol and diesel engines have become increasingly efficient. So the benefit is less than it was. I mean, I'm still a huge fan of electric vehicles. My next car, I'm sure, will be electric, but I'm still waiting for better battery range. I won't say better reliability, but there's, the motors are becoming more efficient, the control systems are becoming more efficient, and the batteries are just getting better and cheaper. So why not wait a little bit?
RK asking, any thoughts on MP Materials? And
so we're on rare earth now, yeah. Look, yeah, rare earths,
Why?
really important business because we need rare earths for the permanent magnets. And Tesla tried using non-permanent magnets in their cars, and they very quickly rolled back from that. Your car will be much more efficient. It'll work much better if it's got permanent magnets in the motors and in all the other control systems as well, the door locks and stuff like that. So, yeah, MP materials, not a bad idea. You've got Macango, you've got Rainbow Rare Earths, and there's something called Ionic in Australia. So there are a few companies out there that are working on rare earth processing. So they're all working on the reprocessing of waste materials, recycled materials. So Macango, where we act as nomad and broker, is one of those. And the stock's done well recently. It's there's so much going on in that space. And I do think actually Rainbow will go better because Rainbow, at some point they're going to get that processing, that mineral processing bit right, and then I think they'll become an important company.
John, thank you so much. I think we could talk all day on the. It's such a great sector.
Telling lots of people that you will get to those questions, and I will get those questions to you over email, and then get them back to our clients. But it's such an interesting space. We just don't have enough time.
Last question would be: do you think back in the day, obviously we had the Mick Davis was the one that used to really drive the M&A in the sector. Do you think there's still M&A to be done in the big names?
Oh, there's loads of it. Yes, I think BHP will come back for Anglo. They are all looking around for assets to buy. They've got lots of cash. I think they definitely. I mean, I know you can earn huge rates of interest very easily by investing in treasuries, but ultimately everybody needs some proof against inflation. They need a hedge there. And the mining companies, it's their business to develop mines. So they've got to find new mines to develop. And we talk to the guys in the exploration teams at Rios and BHP and Anglos, and they tell us what they're looking for. They are very, very busy out there looking for the next wins.
Right. And that Anglos ticks some boxes there.
Well, Anglos is an easy way of acquiring a lot of copper production. If you think copper prices are going up, if you think you can improve the portfolio, Anglos is a very easy win. And it may be that Glencore go for it. It doesn't have to be. It doesn't have to be BHP.
And sorry, as I say, I could keep asking questions for us, but that's golden. And Axel's going to drag us out. John, thank you so much.
Thank you so much, John. We are lucky to have you here so that we can ask you all these amazing questions. Tons more. We'll get them emailed to you, and then I'll get it back to our clients. Thank you so much, John. We'll speak later.
Thank you.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
We're watching a crisis unfold in the UK, and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG. Hello and welcome to Trade of the Week on the 14th of July 2025. Let's look at today's trade to start off with. And I thought perhaps we should look at the Australian dollar against the US dollar. And the reason being that we made a new multi-month high last week, but only marginally so. So we're struggling to go higher here. And that high has been accompanied by a lower high on the daily relative strength index. So basically, we are seeing negative divergence on our oscillator, and that can be an early warning sign for at least a short-term correction perhaps taking place here. So you can see here we've made a higher high on the price chart, but we made a lower high on the oscillator. Now, obviously, it's a risky trade because we are sort of trading against the trend. As you can see here, we have a series of higher highs and higher lows. So it's possible that that trend is going to continue. But because we've got a very, very tight stop, I think I'd still like to put this one on. So it would be to go short at current levels with a stop loss above the high seen on Thursday of last week, which was, I think, about 65.96. And have a sort of downside target around the 65 area. But we'll look at this in a minute again in more detail. I'd like to very quickly mention last week's trade of the week, and that was to go short the euro versus the US dollar. And that one is still short from slightly lower levels. We still have our stop loss in place above the high seen back in April, and a previous high, I think, going back further in time, which was this high here. So basically, we're still below our highs, our resistance. That trade is still ongoing. So coming back to the Australian dollar versus the US dollar, the trade of the week is to go short the Australian dollar versus the US dollar at around current levels with a stop loss above the current July high, which was made, let's say, around 65.96. and a downside target around the 65 area. Hello and welcome back to Technically Speaking. Let's start off with those of you who sent in questions before the show started. So let's do that always now. If you send in your questions early, you'll get an answer first and foremost. So first one I got here was Deutsche Börse. So let's just look at that. DB1 and see what it shows us from a technical perspective. Deutsche Börse AG, here we go. And what we can see here is a consolidation, don't we? And actually a downtrend since the highs seen in May. And basically we can see here a series of lower highs and lower lows. And we're currently in the process of falling through the lows seen back in the middle of June of this year. Now that leads me to believe that we are going to head towards the next lower support area. Where's that support? If you go to the left of your chart, you can see here we've got the lows going back to the 23rd of March, I should say, here on the 24th. Those lows were made on the daily financial bed around 26,310, and they are also, as you can see here, tie in more or less with the lows seen here, this spike low on the 28th of April. And that was made around 26,200. So I wouldn't be surprised if we test that support area. The question then is, can we hold that and bounce back? If so, if you want to go long, what I would like to see is a break through at least the downtrend line or the resistance line, which is this one here. before actually going long, or if you do go long, have a very tight stop below that very recent low if you wanted to go long. But I would wait for some sort of bullish candle to form, for example, like the one we saw on the 19th of June, before getting long in this scenario here, because we're still in a downtrend and Deutsche Börse may fall further. So what happens if we were to fall through and close below this low seen on the 28th of April? Well, as you can see here yourselves, the next downside target is basically the April low, and also the lows going back to sort of late February. So that is still in a downward tracing move. If you are short, I would remain short, perhaps put your stop loss if you have a relatively tight one above the 7th of July high here, because that's also above the downtrend line and above the 30-day simple moving average and above the last relative high. So you've got three reasons that if we were to change and go higher above that high, then something's probably changed and we may be back in an uptrend. So that's Deutsche Börse for you. And then Standard Lithium, SLI, let's look at that. Let's see what the daily chart says here. But yeah, here we go. Now this is something which is really interesting, because what we can see here is we are heading up very rapidly. We've broken through the previous highs seen here in October of 2024. Let's go onto the monthly chart to see where we're heading next to. You can see we came off this really, really high level back in October 2021. And currently what is interesting, you can see here, we are now on a monthly chart breaking above the high seen in October in 2024 on this daily financial bet at 366.5. And that means if we were to close on the monthly closing basis at the end of July, now we haven't seen that candle finish yet, we're not at the end of the month, but if we were to close above that high here at 366.5, then we've got a confirmation of a bottom forming here, double bottom. And that would indicate that we should be heading higher again. And in that case, we take the distance from the low of that double bottom to that high and project that distance higher from that high. And that should take us to around the 520 area, or even perhaps higher. So maybe towards the lows seen in June 2022. So that could be a potential upside target if we close above this high here, 366.5 on a monthly closing basis. Now, if you feel that, well, hold on a second, on the daily chart, what we've just done is literally today, on Friday, closed above that high. My signal's already been given. Yes, you can also say that that's the case. We've risen above the last reaction high. We closed above it. That's bullish. So the question then is, where's your stop loss? Well, here in this case, it'll probably be quite a long way away. Where's the last really big reaction low? It's probably this one down here, going back to the 23rd of June. You can see here that's a long way away, and we've got some support here, these previous highs coming in above that level. If you want a tighter stop, the last one, the reaction low, is actually the low from the 4th of July here, 291 on the daily financial bet. So again, a long way away. So that's in a bullish scenario. If you want to go short, if you are on a short-term trade and you think that's the false breakout above this high, well, you probably know that your stop loss is just above the last reaction high, which is the high from Friday here at 396. And in that case, we may see a minor retracement, which we may see anyway because we've got this doji here. But given the strength we saw on Thursday, that trend to me looks actually pretty healthy. And I believe that the odds are greater for a double bottom to be formed on a long-term time frame and for further upside to be seen on this chart than for a failed breakout to the upside to be taking place here and for us to head back down again. So bullish for me, just glancing at the chart, is the scenario that I would probably prefer on this chart from a technical perspective. Let's look at Vodafone, and we can see Vodafone doing something similar and quite interesting. I think we covered it last week and the week before. You can see here, we managed to break on the 1st of July above that previous high and above that high seen in September of 2024. So basically, we had a bullish close above those highs, confirming that a longer term bottom was being made. You can see that here on the weekly chart. We closed above these highs here. But what's happened since is that we tested that resistance area going back to September of 2023. and that currently acts as resistance, together with, as you know, I like clusters, these previous lows. So these previous lows here going back to December of 2022 and the highs seen in September of 2023 currently act as resistance for Vodafone. Those levels are around or going all the way up to, let's say, 83.24. Once we break through them, we probably will, because we now have a series of higher highs and higher lows, so we are in an uptrend. We may head back towards the 95 area and perhaps also the high seen here on the 1st of May 2023. So that is a distinct possibility. Short term, we are struggling to break through that resistance at the moment, which is consolidating. But again here, where's our last reaction low? It's a long way away. The smaller one would be this 23rd of June low, which I mentioned, I think, last week and the week before for a lot of charts. And then if you have a wider stop, it would be the low here going back to the 5th of June. But unless we hit those lows, this uptrend should remain intact. And don't forget, previous resistance, because of inverse polarity, should now act as support. So if you were to come off further, we should find support probably between the 17th of September high at 79.32 and the high seen here in May of 2024 at 78.73. So Vodafone does still look constructive from a technical perspective on the daily chart. And we also have now another question here from Jesse14 coming back to a stock I don't know, a uranium miner, Cameco Corp. Let's look at that one and let's see what this one says. Uranium, very popular, as you can see here. Very, very clear uptrend, looking very healthy. And on the monthly chart, trading close to its previous all-time highs. And you can see here, once you hit a previous all-time high, quite often you struggle, but that's old resistance, that's the all-time high. That needs to be taken out, and it goes back to 2006. So that currently is being tested. That's why we're struggling up there. So that's important. You know, it's important to look at previous highs going back even decades sometimes, because they can tell you where the market is likely to struggle to go up or not. Now, is that a double top? You could argue it is one, because this high is more or less where this one is, and we fell through that low here, but we didn't close below it. Can you see here on Thursday of last week, we went intraday below that low, but we didn't close below it. And this may just be an ABC Elliott wave zigzag correction. So for me, technically speaking, even from a short-term perspective, whilst we stay above the high seen on Thursday, the low, sorry, which was made at 6,932.5 on this daily financial bet, we are still bullish. Could even be a buying opportunity if you have a tight stop here. If we were to fall through here, we could see a more significant correction. But even then, we've got really good support here between the 23rd of June low and the high seen on the 9th of June. So that's really good support. And then we've got further support, as I said earlier on, previous highs because of inverse polarity can now act as support. So that one here is around, at the worst case scenario, probably 6,252.5, which ties in with this high and this low here. So that would also be really, really good support if we were to see a stronger correction. But for me, this trend looks very, very healthy. Unless we now go into a sideways trend, the odds are still higher. That's just a correction in an uptrend. That trend looks healthy and further upside is likely to be seen. If you're short, you know where your stop loss is, probably just above the recent highs here, the all-time high, because if that gets taken out, we're probably going to see new all-time highs take us towards 8,000 and even higher than that. So a bullish trade, if you have one on, still looking pretty good on this chart from a technical perspective. Obviously, I'm not giving any trading advice. I'm just analyzing the chart very rapidly for you here. I've got a question to do with mineral resources. Apparently, there's a longer-term downtrend there, but now we're seeing signs of recovery. Let's just have a look at it together. MIN.AX. Here we go. And let's look at it because it's a fresh chart from the longest time frames possible, so the monthly chart. But I can also see here on the daily chart that this looks pretty good, because what we did is we closed on Thursday and have a confirmation on Friday above that previous high, the May high. That to me indicates that we're breaking out of this downward trending channel where we formed a bottoming formation. and we're now breaking higher. So we could very easily probably close this gap going back to mid-February and head back up again towards this psychological resistance area, anywhere between the 3,252 area and the 3,500 area. All that previous support here is likely to act as strong resistance, because basically between October 2024 and February 2025, we held here and then we broke through that support. So that's likely to be very, very strong resistance. But now that we've broken above these previous highs, it's very likely that we're going to continue to head into that direction, into that resistance zone. So here, what resistance could we have on the way up? Well, we've got the low going back to September of 2024 on the daily financial back that comes in at 2,954. That might act as resistance ahead of that psychological 3,000 mark, and the gap closure with that low here on the 17th of February at 3,042. So that's minor resistance, and then the next big resistance area is, as I said, 3,250, 3,500. But here I would expect further upside to be seen. If you go on the monthly chart, you will see that we are also closing above this previous high. As I said, you need to wait for the monthly close, but you can still trade it from a daily charting closing basis, because we've gone above these highs. You just need to know where your stop losses are. Well, where's your stop loss? The last reaction low at the very least is probably this one here. That's the low from the 7th of July at probably 2,347. If you can have a wider one, then it's probably the low here on the 22nd of June, or that 24th of June low. That is important here. But yes, it's a healthy uptrend. I believe that further upside is more likely to be seen than any downside reversal in the medium term. And Greg's, let's see whether Greg's is in a short-term downtrend. I love it when you send in questions. Thank you very much for that. And yes, I mean, Greg's is in a short-term downtrend, and not just short-term. Let's be honest here. Let's look at the weekly chart, and we've been in a downtrend from the high seen in September of 2024. So for me, that is more than a short-term downtrend. I mean, you can clearly see here they were still pointing lower. If I draw trend lines on there, you can see here that we're, even with the accelerated trend line, still pointing down. So let's just look at this. And we tried last week or the week before to hit that downtrend line, but we still came off it. Now, what is interesting though, potentially, is that the low we made on the 30th of June, which was marginally below the low seen in April of this year, held. So we only sort of intra-week closed below there, but then we bounced off there. And on the daily chart, what we're seeing is basically us holding, as I said, this is the low I just talked about here. We're just grinding higher. So if you want to trade against the trend, or if you have a long position here, your stop loss is probably below the 2nd of July low, because if that goes, we're probably going to head quite a bit lower. And if you want to get into this trade now, well, confirmation of perhaps further upside being seen is a move above the 9th of July high on the daily financial beta at 1,776. But even then, be very careful, because what we've got here, can you see all that resistance area, which lasted for about a month or so? That may thwart the upside momentum. And if you have a market which goes down very rapidly, like it did with this candle here, and then gradually goes up against it again, quite often you get another retest at least of the low, or another move to lower lows because of that sharp down move. So basically what I'm saying here is, technically speaking, unless we were to take out the high seen on the 2nd of July at 1,975, for me, this still remains in a downtrend, and the odds are greater for further downside pressure to be seen, even if short term we're trying to grind higher than any bullish reversal to be made here. So whatever you do, try to invest or trade in the direction of the overall trend, because then the odds of you being right are going to be much greater than if you're trying to pick a bottom or trying to pick a top. Believe me, I know from experience. But thank you very much for watching Technically Speaking today, and I hope to see you again, not next week, because then we've got probably a Chris Beecham filling in for me, and not the week after because I'm off on holiday, but I'll see you in August. Thank you. Bye.
Stocks keep going. It's Thursday, July 10th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in studio in Chicago. Maybe Radigan today? We'll see. We're here for the next hour as we take you to the futures market close, 5 p.m. Eastern, 4 Central. If you're joining us on the platform, tastytrade.com, on the website, tastylive.com, welcome. Come over to YouTube, join the chat. Tell us what you think of this low volume, low volatility melt up here in stocks. It's a day of rotation where the NASDAQ is down, but basically everything else is up on a sector rotation basis of the ETFs that we track here, the 25, 24, we're in the positive territory for the session. S&P 500 technically puts in a new closing high up near 6320 or so. We find the NASDAQ off by 0.22%. But it's modest gains all around. The Dow's up by 0.36. The Russell's up by 0.48 or so. The attention in today's session really goes to Bitcoin, which clocks in a fresh all-time high here on the other side of what may be the early days of a breakout we've been monitoring here on Overtime. We likewise have silver prices bounding up to a fresh closing high for the year. It's a 2.74% gain, actually up at 37.64, as it were. Maybe we're finally getting some legs. In the world of yields, weaker bonds earlier in the day run into a 30-year auction that, quite frankly, it didn't look that good. Foreign buyers were down a little bit. Bid to cover ratio was a little bit lower. It stopped through. That's the silver lining. Bonds do ultimately trade higher into the end of the session as well. So you get a mixed day for the dollar. Okay, there are some odd headlines out here. We're going to have to talk about this letter that the administration sent to Chair Powell about misappropriating funds for renovations to the Mariner Eccles building, perhaps as a rationale to fire Powell with cause.
Oh, good Lord.
Ilya, before we get there, though, talk to me a little bit about this equity market rally. ES keeps going. We say it's a light day. It's not even 1 million contracts traded, 876,000.
Yeah.
Do we just chalk this up to being a day that ends in Y during the summer?
I mean, we're at the previous high. So if you're not long already, the risk reward to getting long here as a trade, right? Let's very clearly anchor ourselves. We're talking about not the long-term positive drift of equities here. We're talking about, would you allocate the incremental dollar to a, let's say, 45 DTE type of a trade cycle here? No, in my mind. Very clearly not. You're at resistance. You need a break of it to have something actionable on that kind of a window. So does it make sense to go long here now? Obviously, we're in the after hours, but I suppose there's always futures markets. No, it doesn't. So in my mind, if you're going to do anything here, and I don't think you have a clear sell signal, but from a risk-reward perspective, and this is how I end up in my exposure, it makes more sense to be short than long. Because if you're wrong fast. You get a breakout, you get out. If you're right, you have asymmetric upside because there's a lot of room to fall. So in my mind, it makes sense to be tactically and in a risk-defined way with full knowledge of the fact that you're fighting a market that wants to go higher. It makes more sense to look for a pullback than it does for a breakout. But it's not telling you anything new today versus yesterday versus the day before.
Thomas, that is a fair point. We've had these ranges drawn on the 4-hour charts here on ES and NQ for the past few sessions, more or less. We haven't made any significant progress here within those ranges. It's just closer to the top. Why wouldn't we end the week with a bang where the NASDAQ gets up to 23,250 or so? What's a 1% more higher between friends?
Yeah, it's like what's the impetus for that? All the economic data is out of the way for the week, pretty much. You had the bond auction. I think the focus is going to be on next week, the inflation numbers. I don't like getting long here either, and I haven't been for the whole week. I'm waiting for a pullback to get long. and volatility came down today. I mean, you could say the Nasdaq's down, ES is up a little bit. So what do you take away from that? It just looks like a market that is complacent somewhat, and that's not really a time where I want to go long. So I'm keeping my exposure mostly out of the equity market for now.
I think this thing is going to chase higher. So just continuing with the chase mindset, I don't think 45 and 21 out is the right way to go. But I'll tell you guys, these things look like they're ready to pop. NASDAQ, S&P, Russell's even edging up. So I'm playing for another swing higher here tactically in the short term. 4 days to expiration, long the 23,300, short the 23,350. It's a 10-to-1 risk to reward. Risking $90, $92 technically to make over 900. It'd be a nice little swing trade here. I think we can get another pop. This thing's going. It hasn't stopped. The volume low, the volatility low. Of course, if the volatility and volume come back, a lot of people are off sides. And we're still in the seasonally positive window. This market tends to run through expiration. Some might not call that seasonality. I would call talking about expiration seasonality. And
sure sounds seasonality adjacent, though, doesn't it?
And we find ourselves, when you get through expiration next week, it happens to coincide with the average. If you look back to 1950, when do markets tend to peak in the summer? They tend to peak around July 18th. So you have expiration on the 16th. You have the seasonal peak for markets for a few weeks on July 18th. We get one more push higher here. That's a week from now. I could play a.
Also, it's right before I go on vacation, so that would be absolutely perfect.
Well, it's also my birthday. So, like, if this market wants to run up into the highs, that's a welcome gift. And so I'm going to treat myself
Give you a birthday gift, roll over and give and give me a vacation gift. Let's go. I'm with it.
Sticking with stocks here for a minute, we talked about the sector performance earlier, where it was a pretty decent session. In fact, it's only XLK, minus 0.32%. That's lower today. Everything else is in the green, led higher by the metals, XME. I suppose that means we really should just talk about what's happening here in the metals. Elia, while we were going through some technical difficulties here before the show started, we did start off a little late. You were mentioning that there was this notable divergence in performances at the start of the year. You know, if we told you that, you were mentioning if stocks are up, if bond yields are lower, the dollar's getting crushed, silver, gold, Bitcoin doing what they're doing, you would think that there's some sort of anti-dollar, anti-fiat trade making its way through the system.
Yeah.
Because after all, even adjusted for, when you adjust for FX, the S&P 500 is negative on the year.
That's right.
Silver here today is 2.77% higher. It's the high closes the year for the metal. Is this part of that thesis?
It certainly seems like it. I think when we look at kind of noise aside and just completely turn off headline this, war that, whatever, and we are going to delve into all of this with charts on Macro Money right after this, so definitely hang out. But it's really unmistakable. Stocks really haven't had a really big move in the first 6 months of the year. It's been a little bit greater than average, but only a little. The 25-year average for a 6-month move in the S&P 500 is 3.7%. We moved 5.4% in the first 6 months of this year. It's not exactly a screamer in relative terms. But when you look at what gold did, which is a 25.2% rally in the first 6 months of this year, and its historical average is 5.7, that's the move. So there's a definite sell America vibe to all of this. But for, incidentally, what we saw in the treasuries, because yields are in. So it's not like people are shunning U.S. securities. The other thing in the first 6 months of this year is the 2-year yield is down 12.1%. That's not that crazy. The historical average for a 6-month move is 13%. But more importantly, the 10-year yield in the first 6 months is down 7.5%. And that is offsides. The historical average is 3.7% over a similar period of time. So it's not like people aren't buying long-term U.S. bonds. They are. So what does all of this tell us? That the market is convinced the Fed is going to have to cut, that is going to have to cut more than anybody, including the Fed, expects. You're already seeing it in Fed funds futures. You're seeing it in break-even rates. The question is, well, if it's not a collapse, if it's not sell America, we're going to cut off our nose to spite our face kind of a situation, the dollar is absolutely crushed. Gold is surging, but people are buying bonds. What is that? It's a recession.
Bonds are up. Gold bounces back a little bit today, Thomas. You said that you were operating in the metals like I have been, and you're thinking about making some changes to your silver positioning to account for today's move. What have you decided to do here, assuming you're still keeping your long exposure?
Yeah, I'm still keeping my long exposure. Up until today, the silver trade wasn't working. It came back. So I was at the 18 days out with my call spread for silver, rolling it out to the 47-day, I believe. So still want to keep the exposure on there. I think this move, clears some technical boundaries. I think silver could definitely run higher. And like Ilya said, if this is a sell America thing, silver and gold, they're going to do well if these recession fears become more prominent. I think that's where you at least want to have some of your money.
The one thing that gets in my way about silver that kind of like sticks in my craw, and this isn't the case about gold right now, but silver positioning is getting really stretched in the futures market, which granted, not the end all be all, but it's really high. I have to run the numbers again, but I think I saw like the Z-score is somewhere north of like 1.8, which is, we're chasing a little bit here. It's interesting because if you look at positioning outside of silver futures and you go to like SLV, you're looking at open interest in the options market. It's not exactly a market that's skewed to the upside. In fact, most of net positioning is actually a little bit still bearish in SLV. So I don't know if that helps us one way or the other. There's no real agreement there, but I'm with you. I'm in at 47 days still. We've been articulating this for some time and like pushing on a string, buying the call at the top of the range and it falls back and then just watching gains go away. It's been a little frustrating, particularly with gold. Silver here is working though, so sticking along the 38.39 right now in the SIU 5 contract, I think makes a good deal of sense. And yeah, you mentioned it in last call because I think you were trying to get away from a little bit of a conversation here on this, but we are going to bring it up. Bitcoin doesn't look like it's topping, my friend.
No, it not.
It looks like it's breaking.
Not
up.
today. Today we confirmed it. And there's no reason to get away from it. I'm still not going to buy it for obvious reasons, sort of thematically. But the price action today confirms it. If yesterday we were at the highs, much like we are today in the S&P or NASDAQ, yesterday we were at the high and saying, okay, if it's going to break, it's going to break, but it hasn't yet. And what it's been doing is getting stuck in a range at a time when other risk-on assets have been rallying up a storm. So what's wrong with this thing? The dollar is down a lot. It can't rally. Stocks go up a lot at the same time. It can't rally. Today it can. So it finally takes out the high here. We have a breakout. Let's see what this is. I think if you were going to be a buyer of an anti-dollar asset, I wouldn't look here. Because if you, like me, expect that stocks are a better bet lower than they are higher, then you probably don't go looking for higher beta, higher volatility exposure to risk sentiment. But ticker agnostic, asset agnostic, if you just look at the price action and the chart, this is a bullish breakout.
Thomas, what can I do to entice you to join this trade and get on board with an IBIT breakout or a Bitcoin breakout equivalent to $135,000 a coin?
You know, I think the Bitcoin story kind of plays into fears on the fiscal deficit. I think it's a place where traders kind of see, you know, getting away from the US, perhaps getting away from those worries with reckless spending, if you want to call it that. But all these crypto ETFs that have come online have really opened the door to a lot more capital via retail and things coming in. And, you know, in a speculative backdrop where you're going to have, you know, chasing gains, Bitcoin makes perhaps the most sense if you're taking, you know, those kind of tail risk bets where you can increase the alpha in your portfolio. So I think it's going to keep going up. I mean, there's been a lot of naysayers along the way for the past year or two. I mean, all the way back, but especially the past couple of years. And it just keeps proving people wrong. So, I mean, it's not something I would short.
I've been one of these naysayers.
Yeah, it's not something I'm going to short anytime soon.
No.
I think IBIT is a good way. Bitcoin futures are pretty large, but, you know, if your account supports it.
So if we think about Bitcoin issuance per day right now, I think we're looking at something around 144 coins unlocked every single day. So multiply that by 7, you're looking at 1,000 coins a week. Put this in perspective. According to the website AI Invest Coin World posting on there, the data that they have available from their proprietary feed suggests that the institutional investors, the 54 entities that they track over that same period where a little under 1,000 Bitcoin were mined, institutional investors have mopped up 8,434 Bitcoin. So there's a little bit of a buy, sell, demand, supply imbalance right now, whereas more companies are taking this onto their balance sheet as more people have access, Thomas, as you pointed out, right? I remember the first time I tried buying Bitcoin, I had to go out to a pharmacy in Red Hook and stand by some phone and wait for instructions. It was really shady. And now it's just like I can buy it like I'm buying SPY. I just punch an IBIT. So it's a lot easier. And of course, when we say institutional, that could be like BlackRock buying Bitcoin for IBIT. But this thing looks great to me. The fact that we have this, it's ticker agnostic, Ilya, misgivings aside, if things are going to get silly and stupid and we're just going to pump assets and the Fed's going to cut rates and we're going to run the deficit up, I mean, that's all inflationary.
Yep.
So what's like the single anti-inflation asset that's outperformed everything else since its inception? Bitcoin's preserved purchasing power better than basically anything else since 2009.
I mean, this is the whole issue. It's either inflationary or the market is right. And we say this because when we look at the number of rate cuts that the markets have priced in, and we look at what the bond market's inflation expectations priced into it, not anybody's opinion. What that says, it says we're not in an inflationary risk. It says we are at risk of some sort of a disinflationary outcome. And so when you look at all of that and you go, okay, well, obviously stocks don't see it yet. They're at the highs. Obviously the Fed doesn't see it yet. They don't want to lift up their rate cut expectations. They're resisting at every chance they get. But the bond market and the cash market clearly see it because the dollar has been getting absolutely shellacked. Yields have been falling all year. So with that, then, do you justify your Bitcoin long on purely the price action? That makes sense. It's a perfectly valid way of doing it, and you're absolutely right. From a ticker agnostic perspective, it's a breakout. There's no question. Or do you look at this and you say, all right, well, obviously, something here is wrong. Someone here is wrong. Either it's we're going into a more inflationary environment or a less inflationary environment, but clearly the bond market is at odds with both stocks and the Fed on what this is. This is going to resolve somehow. So am I going to take my bet on how this resolves by essentially saying stocks are so right that I'm going to buy Bitcoin and lever up?
Yes.
I'm not going to do that.
Yes. No, I mean, like, think about how Bitcoin did, though. I mean, Thomas, what did Bitcoin do in 2021, 2022? Like, the asset came in when inflation was raging the most, right?
Well, yeah,
that's when
the Fed was aggressively hiking rates and stocks were falling all year.
I would just point out that when you get back to a world where real returns aren't being eroded because of inflation, and you can then say, well, you know, they're pumping the deficit and the debt and they're pointing rates lower. What do you do in that situation? That's asset inflationary. It may not help the real economy by any stretch of the imagination, but it pumps asset prices. And Bitcoin is something that's been one of those magnets for the pump. So I don't think we should ignore the signal here, right? People are clearly reaching for risk right now if they're going out into Bitcoin to this degree. But I would posit, and I've been banging this drum for a while now, Ilya, where are the yacht parties? Where are the videos from Miami? They're still not here yet. This is not a market that I think, you know, it's gonna take another $10,000 or $20,000 to run before people start going, oh. I
just don't think this is a Bitcoin bubble. So I'm not looking for yacht parties. What in my mind you've seen in Bitcoin since late December 2024 is basically exactly the same as what you saw in the S&P 500. You reach a top in late December, you idle into the second half of February, you get a growth scare. Risk assets fall, stocks fall, Bitcoin falls. You get a crescendo in early April, you find a bottom, you bounce. You retrace all the way back. Stocks do that, S&P does it, NASDAQ does it, Bitcoin does it. Stocks have been breaking out to record highs over the past, let's call it, several weeks. Bitcoin finally decided to catch up today. So it's an underperforming asset.
Then you must really hit Ethereum then.
Yeah. Ethereum, the Russell 2000 of the crypto world.
It's doubled since April. Give it some credit. But look, if Ethereum's rallying, who's stopping this
one,
trade?
by the way, is actually at its high. So I don't know how well technical analysis works on this illiquid nonsense, but for what it's worth, this one hasn't broken resistance.
Thomas, you've been someone, switching its attention to
this
something else here.
By the way.
Yeah, you guys, we've had this conversation in recent weeks. I just haven't put anything on here in Tesla, but I know that you guys have had discussions. Thomas, you've been fading weakness in Tesla. You did it back in early June. Dylan's been doing it, and it's been working out. This 50% mark. Forget 50% being a number, right? Just go to the platform, you click on tool, click H once to get horizontal. Just draw a straight line right around.
Horizontal line through chart, yeah.
Right, like
as we were saying, even I was looking at this as a buying opportunity. I just didn't do it because of size, but the setup was, I thought, a no-brainer. We talked about it on the show earlier this week.
There's news that XAI is putting Grok in Teslas, as Musk said. Now, there's no guaranteed timeline for it.
Oh, good. It's had a real great run this week. That Grok.
Thomas, what are you doing in Tesla?
Right now, I have a put spread on at 300, 295. So pretty much right around the line you drawn is where my put spread is. It's lagged the market. It's had some of its own, independent things dragging on it. Elon Musk, political controversy taking away focus from the company, et cetera, et cetera. You know, we saw back when he officially left the White House, Tesla rallied. And then, you know, he kind of waded back into the political atmosphere. And I think some investors are concerned about that. But I mean, what's been driving all of it isn't how many vehicles they deliver and stuff. It's, you know, the potential as a tech company for the future. So I think it'll get back on track there. But this play right now is just pretty much to fade the weakness and holding to kind of that technical level you drew out there. So I have 36 days left in it. I'll wait a couple weeks, you know, until it gets down to 21, 22, and hopefully take it off for some money there.
Yeah, the news that we're maybe seeing XAI put into Teslas as of next week is obviously very interesting. It's part of Elon Musk's longer-term plan to just maintain control over Tesla, because if they were to buy XAI, that's Elon Musk's company, so it would help him out monetarily significantly, as well as in terms of governance. It'd be quite impossible to get him out of Tesla in any form or function. So I think that's the direction that they're pushing. And yeah, I don't own a Tesla, so I'm not worried about. Ilya, what was Grok calling itself earlier this week?
It was calling itself Mecha Hitler.
Right.
And responding to messages in a very, to coin a word, Mein Kampfian way.
I would, you know, this is one of the great tweets that's going around about Grok and its engine right now. Part of its chain of thought process is actually referencing what Elon Musk thinks on the Israel-Palestine-Gaza conflict when it's formulating its stuff. So, you know, Twitter is a really interesting business, right? Because like if that's the type of content that's going to be proliferating on the platform, obviously it's a dead end for advertisers. But Twitter then just becomes the data pool from which XAI trains its models on. Which again, I mean, if you looked at the model this week, you might say that's a faulty data set, right? Like you're not going to train your AI on 4chan, I hope.
I mean, what did they train Grok on then? Because it sure sounds like that's exactly what they did.
Okay,
that and Daily Stormer.
Okay. All right. So I would point out the website that we referenced previously. They are an independent group that indexes and benchmarks these AIs over time. And this is why this is actually an important story here. Their independent analysis of Grok 4 puts Grok at the top of the pack in terms of AI modeling right now.
Shocking.
So, Thomas, when you think about, you know, your Tesla trade here, Tesla doesn't have Grok itself, but it does use rudimentary AI, obviously, for self-piloting. This is something that's really, Grok is something that can help Tesla despite this week's malfeasance, I suppose. But this is a good-looking chart. The chart's looking better and better. It's a series of higher lows, right? We're beginning to funnel into something that's looking a little bit more like a triangle here off the lows. It's a compelling chart setup. I can't shake that. Above 350, guys, I think then this stock all of a sudden becomes a very different conversation for being directional. And likewise, if you're below 275, 260 again, you have to think this thing's in a lot of trouble. So there's a lot of optionality right now in terms of how this plays out, but we could be getting ready for the breakout sometime soon. Ilya, if Tesla isn't the company that we're paying attention to, I'm still trying to wrap my head around why no one except for Jim Cramer is talking about NVIDIA right now. Granted, this is probably Jim Cramer's best pick. Going back to his first mention, as it's been talked about in the media today, NVIDIA is up 42,000% since he first recommended buying it.
Yeah.
That papers over a lot of the other Jim Cramerisms over the years. But this stock, all-time highs. Yeah. Why aren't we talking about AI the way that we were back in January or February?
I think this speaks to the kind of conversation that we have been having about wars in the Middle East or tariffs from the White House. We've just had half a year where we were barraged with everything you could possibly imagine. It seems like a lot of it is in the sauce now. And as you know, I mean, my whole perspective on all of this, as we've been looking at sort of the normalization of NVIDIA's earnings surprises over time, where they were surprising in the double digits and then the low single digits and now the very low single digits. The market is benchmarked to kind of a level of status quo. And there comes a time in the adoption of any new revolutionary technology. We saw this with railroads. We saw this with the transformation of the American colonies into a nation. We saw this with telecoms, famously, of course, in the dot-com crash. The technology appears, there's a hype cycle about its possibilities as you're sort of in the picks and shovels phase. You start building things and people start to mentally extrapolate what it could mean, well ahead of when anything actually exists to justify those kinds of valuations. And when you get to sort of peak wishful thinking, and everybody that's had the wishful thinking to go long has, for the most part, there's a washout. It happened with railroads again, it happened with telecoms, on and on and on and on and on. We're getting, let's say, closer to that kind of a thing for AI as opposed to the alternative. You can't just extrapolate endless capacity forever, is what history teaches us. You at some point need to have the point where hype meets reality. There is a valuations reset, and then the great and promising future actually builds out. I mean, certainly the dot-com crash didn't say anything about what the internet would ultimately mean and how revolutionary it was. The collapse of the railroads stocks didn't tell us anything about what railroads would ultimately mean for turning America into an industrial superpower, et cetera, et cetera, et cetera. It just feels like we've gotten to a place where that which we need to know about AI and sort of the pie in the sky version of the future, we know those things. And the market is going to get less and less sensitive to things that it knows, that it's benchmarked. The real question now is either can you go from strength to strength because you find something new in this story, or is this kind of acquiescence to the obvious tell you that you're running out of steam and some kind of a reset in valuations is on the horizon?
Thomas, you haven't had trouble trading the semiconductors higher here in recent weeks. Is this something that's still going to keep going up in your view? It's a 9.7 IVR, so low volume, low volatility. Why not run to 300?
Yeah, I think so. I mean, there's no reason to derail this rally right now. The semiconductors have been pretty resistant to, the broader rotation we've seen in the stock market. So, there's some enthusiasm that's more baked in here than it is elsewhere in the market. And like Ilya said, you hit a saturation point, but there's still, you see investment headlines every week, if not more, into data centers and collaborations with energy providers to fuel these data centers. And although some short-term projections have leveled off for some of the more enthusiastic targets for investment, the long-range forecast for, getting all these chips is still pretty high. And, even Bloomberg had a story. China is building a bunch of these data centers that they should not have enough chips for. So they're building data centers that, they can't get the chips for because they can't get the H100s, the H200s, or the newer models from NVIDIA. So, they can't produce them themselves. So why are they building these data centers? But you're seeing the same thing happen in the U.S. There's still plans for massive data center expansions, plans for how to power these data centers. I think the enthusiasm is going to persist through anything except more than a mild recession. So I like the chips here a lot. Yeah,
I agree with that.
And the China story, it's not necessarily bullish for chips alone, because China has embarked on a lot of enthusiastic projects before that ultimately end up going nowhere, and it's more of a case of regional or provincial leadership trying to impress the central government, and then they end up not being able to follow through. But maybe there's something there. Maybe they're expecting some kind of easement in these chip restrictions eventually.
I mean, obviously, the story of China for the past few decades has been of wanton overbuild only for the sake of putting people in jobs. The history there is not lost on anyone. When a Chinese emperor is incapable of providing jobs and sustenance, the Middle Kingdom comes apart. We've seen this happen time and time again. And so if you look at the current kind of environment in China as essentially just not dissimilar, by the way, from what's going on in Russia. I mean, in Russia, you've historically had a czar, then you had a comma czar, and now you have a corporatist czar, but a czar is a czar. And what you have in China is basically a red emperorship, as it were. And they understand, I think, very clearly what they need to do and how politics in the country works. Now and for all time, it would seem. So for decades, they've been building ghost cities and industrial capacity for which there is no demand, and EVs that they're now going to dump on any market that hasn't already passed some sort of barriers to prevent the dumping, because there are no Chinese consumers to buy these EVs. Any number of things. I mean, this just goes. The chips thing is just another thing that they've overbuilt. So sure, they'll keep going until the house of cards caves in eventually. They haven't had growth in 2 years, really. So they're pulling out all the stops to kind of stay afloat. We have second quarter GDP numbers out of China next week, and chances are for 9 consecutive quarters after the inflation numbers we saw this week, we're going to get a situation where nominal GDP is going to be lower than real GDP, which tells you that for 9 consecutive quarters, so far 8, China has been in economy-wide deflation. That is the definition of overbuild. When demand outpaces supply, people compete on price. The price goes up. There's inflation. When demand is inadequate to absorb the supply, prices fall. All of China's economy is essentially in the discount bin for 8 consecutive quarters, probably 9 when we get next week's data. It's overbuild textbook.
And it's hard to stimulate your way out of it when the demand side isn't there as well.
That's right. Lord knows they're trying. They've thrown every which version of monetary and other forms of easing at this thing, but for creating government demand, as, for example, the West did during COVID, and forcing it through the economy. And what do we see? People have even started to take out loans. They're just not spending the money. the spread between time deposits and demand deposits in China is the biggest it has been on record for as long as we have data. So yeah, lending is perking up. For the past 2 months, we finally saw, looking at the Bloomberg Credit Impulse Index, that in China you've had a positive increase in the share of new loans in GDP. Finally. But is anybody spending the money? No. There is no demand.
Ilya, yesterday we got the news that Trump's putting 50% tariffs on Brazil for political reasons, which I suppose is kind of like putting sanctions on a country, right? America sanctions countries when we don't like their internal politics, but this seems to be done through we have a trade surplus with Brazil, so slapping a tariff on them makes little sense. Brazilian stocks down 1.53%. This has been a place that you've been bullish this year, and granted, Brazilian stocks have done well so far, but hasn't been a good turnaround this far in July. Do you still have a proclivity for overseas equities relative to their U.S. counterparts?
Certainly in Brazil, largely because I think what we're doing in Brazil and what is happening in Brazil is it's pulling closer and closer to China. Now, Lula, in his political comeback, Brazil's leader, he's pretty unpopular this time around. And what the president is doing is largely aimed at what he believes is an unfair attack on Brazil's former right-wing leader, Jair Bolsonaro. But all of that is kind of noise. What's actually occurring here is Brazil, from a policy perspective, under Lula, is pulling closer and closer to China and offering them up, for example, beef, which China tends to import from either Australia or the US, and saying, hey, we have all the beef you need. We have all the soy you need. So if the world is going multipolar and if it's splintering, then for all its protests of being neutral, Brazil is very clearly in the Russia, China, Iran camp based on how it's behaving. Now, maybe what this means, given how unpopular Lula has become, is that you're going to have a backlash. They have elections coming up next year. You have a backlash, some sort of a Malay type character swoops in, like Javier Milei in Argentina, right next door. And you have that kind of a hard change in Brazil. That's good for Brazilian stocks. Or you don't. And instead, Brazil emerges as a key backstop for China for all of these things. Well, that's not bad for Brazilian stocks either. Might be worse for Brazil, the country, but certainly not bad for Brazilian suppliers of all these things. And so if you look at a chart of EWZ over a longer term, what you see is that it's breaking out. In fact, it has broken out of a very long-term decline. If you go to a monthly chart or a weekly chart, you can see that this year has marked a very clear departure from a long-term decline, because I think the market has recognized that you're looking at something where, at the very least, equity valuations in Brazil probably have some kind of upside. So with that in mind, I'm still long. I think we've had a nice little pull back to retest former resistance as support, and I actually bought a little bit more.
Thomas, Brazil's game is soybeans, and you're a resident soft ag guy around here. We spoke a few days ago about what was happening with corn and with wheat. Is there anything interesting on the board here, just I know it's not the typical topic we talk about, but when volatility is this low, you have to go sniff it out. And the IVRs in corn, soybean, wheat, they're sizable enough. Do you got anything doing in this much maligned, unloved sector?
Yeah, so I mean, Brazil actually has been exporting a lot of soybeans to China, right? Brazil displaced the U.S. as the largest exporter of soybeans to China. China's still importing a lot of soybeans from China, but now corn, Brazil's also looking at a 10% increase in their corn crop from last year, and they're harvesting soon. They're competing with U.S. corn. So U.S. corn exports have actually strengthened over the past few weeks, and we're above the USDA's yearly projection to the tune of around, we're 3% over it. So there's a lot of corn on this global market. That's driven prices really low. We're trading right under 400. When we went under 400 in corn, I bought a micro corn contract to the long side. I think this is, a lot of the supply, the oversupply is now priced in, and we're going to look for a bounce soon. Of course, this is a very speculative trade if you're trying to get long corn here after, an extended downtrend, somewhat of a risky trade. But I think, the upside, if we do get, through this harvest and you see that the competition for U.S. corn stays elevated, which exports are showing right now, I think we could clear some of this old corn crop in the U.S. and, make way for this new crop to have higher prices. So yeah, I'm long corn. There's good volatility in the product compared to especially a couple months ago. So, the volatility is there if you want to take defined risk trades on it.
The one thing I'm looking at in wheat here today, just for something I'm going to chew on for tomorrow, we did set a new low in wheat relative to yesterday, but we closed above yesterday's high. That's a bullish engulfing bar. We did close above the 1 week, the 1 month, and the 50-day moving average. So potential bottom here. In any event, we're out of time for overtime here for this Thursday, July 10th. We'll be back on Monday, as we are every Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Thomas Westwater in Chicago, I've been Chris Vecchio in New York. Good luck trading. After a brief break, more Tasty Live. Ilya's here with Macro Money. See you there.
See you there, everybody. It's another quiet day on what has been a quiet week for financial markets. Not a whole lot on the economic calendar this week, so not surprising that we're idling across the major assets. But we'll take this as an opportunity. It is, of course, the beginning of the second half of the year. So what we'll do is we'll take stock of what happened in the first and go asset by asset of the majors and see, never mind what the data says, never mind what the headlines say, what does the price action say about what macro narrative and what macro story we need to be telling ourselves as we get into the second half of the year. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we'll start by taking stock of what has actually occurred. We'll look at just hard performance, no economic indicators on our show today, just looking at the price action. And what we'll do then is we'll look at where all of these moves leave each one of these major assets, and we'll see how it goes for the setups that present themselves for the rest of 2025. So let's start here with this, and I'm looking at it as kind of a scoreboard. In the first column here, we have the second half of the year to date, so call it first half of July so far, essentially. The next column here is what we did in the first 6 months of the year. And for reference, there's a 25-year average. Now, one thing to keep in mind here is that, of course, Bitcoin doesn't have a 25-year average. It hasn't been around that long. And so what we have here instead, looking at that, is a 7-year average. I tried to single it out as far as color coding here to make sure that we're not looking for this as apples to apples comparisons to, let's say, the S&P or the dollar, because, of course, this is not an asset that's had that kind of a track record, and so we wouldn't be saying exactly the same thing about it when we compare its recent performance to a kind of historical norm. So let's go down the list here. What did we see in the first half of this year? S&P 500 was up 5.4%. Now, for all the fire and fury of wars in the Middle East and the rollout of the tariffs and the apparent sell America kerfuffle where stocks, bonds, and the dollar were falling in tandem toward the beginning of April, end of the first quarter going into the second. For all that, the S&P 500 has only gone up a touch more than an average 6-month period over the past 25 years. 3.7% is the average, 5.4% is the gain that we have. Solid, but nothing off the charts. NASDAQ is a similar story, 7.9% gain for it, 5% is the norm, so not exactly soggy, but also not crazy or standout. Certainly good, but not amazingly shocking. No, to go for amazingly shocking, you'd have to look at yields, gold, or the dollar. And of course, there's a special spot here for crude oil, which we'll get to in just a second. In particular, the most interesting thing on the yields front is just how volatile the long-term interest rate structure in the U.S. has been relative to history. The 10-year yield down 7.5% here in the first 6 months of the year, and the normal run is 3.7. So this is almost double the usual move. And interestingly, for all the screaming about sell America and everybody is fleeing our markets and nobody wants to own dollar-denominated assets, they certainly seem to be willing buyers of U.S. bonds. Because, of course, when yields fall, what that means is that bonds are being bought. Bonds are up in the first 6 months of the year. Now, again, it's not anything crazy, but there it is. The swing at the front end, where the sensitivity is less to, let us say, longer-term fiscal viability concerns, and more so to near-term monetary policy concerns, the story is about easing. And despite the Fed's resistance, we have about a standard size move, 12.1% decline in the 2-year rate so far this year. The average is a 13.1% swing, and it's to the upside. So this is certainly a move out of step with the norm, both in terms of direction and perhaps a little bit in terms of magnitude, but not much there. Certainly that for the 10-year, though. It is almost double the average move and in the wrong direction relative to the average. So there's a clear story in the bonds here suggesting we're not positioning for higher rates or for some sort of sovereign collapse. The Treasury market is being bought, and the markets are betting on Fed rate cuts. We'll put a pin in crude oil for just a second because that is possibly one of the more magical of these numbers, given what the news would have us thinking. But what is certainly a part of a sell America type of narrative is the US dollar. The major alternatives to the US dollar seeing blistering gains in the first 6 months of the year. Gold up 25%. That's huge relative to the average. Euro up almost 14%. Again, huge relative to the average. Yen up 9.1%. On average, the yen barely moves at all. So we have a very clear sell dollars narrative here. Now, Bitcoin is up 15%. Again, asterisk, this is only a 7-year average. A 6-month run for Bitcoin that is normal is 42% over that average. Obviously, it's a very young asset, and this includes periods of immense volatility as a function just of illiquidity alone. Obviously, that liquidity issue has been diminishing with time. Bitcoin has become more and more liquid with the introduction first of futures, then of ETFs. So there's been a significant maturation in these markets. Nevertheless, a drop from 42 to 15 is a significant decline. I just wouldn't necessarily say that you can chalk this up easily to Bitcoin looking soggy, and instead look at this as some combination of momentum cooling and of the asset just becoming more liquid and more mature. And so its up and down swings have, thanks to there being more buyers and more sellers at every level, they've just calmed down some. But there is a story in these numbers, Bitcoin aside. If we take a look at, and before we get into it, we'll look at crude oil here as a last bit. But if you look across all of these assets, one by one, there is a narrative to be extracted. And it isn't the narrative that you might expect if headline reading is your pastime. So, and we save crude oil for last because it really makes this disparity very, very clear cut. We have had all the reasons in the world for crude oil to be surging if you were to read the headlines. The situation in the Middle East has only become more acrimonious. We had Israel strike Iran directly. We had the US join them in striking Iran directly. The situation in Gaza seems no closer to any kind of unwind. And the situation in Russia and Ukraine isn't getting any closer to a resolution either, it would seem. In fact, just this week, the president was bemoaning what Russia is doing, and ostensibly his attempts at peacemaking have been rebuffed. Supposedly he had a good relationship with the Russian president and thought he could be a vector for some kind of a settlement. Well, that's not occurring. So all of the disruptions that you might have expected to be so worrying for crude deliveries, they give us a net out to a 9.2% decline, which is obviously way off what the historical average of a 5.6% gain is. And that really is a kind of avatar for how one might read this data more generally and say, well, if we ignore the headlines and see what capital is actually signaling with where it's going, what do we need to think about? What do we need to worry about? What is the macro story really? if we listen to the price action. Well, crude oil is down when the headlines might think it's up. At the same time, the dollar is down and yields are down across the curve. Okay, if yields are down and the dollar is down, that seems to suggest that the dollar is expected, or the markets are positioning for the dollar to be less attractive as a thing to hold. Okay, that is sort of Forex markets 101. When a currency loses yield advantage, it becomes less attractive relative to other currencies. But is this a kind of sell America, everything in the US should be sold that's not nailed down kind of a move? Well, clearly not, because 10-year bonds are being bought. That is to say, the markets are signaling confidence in the U.S. as a long-term borrower, Moody's downgrade, belated though it was, notwithstanding. We're also seeing that at the front end of the curve, as we were just saying, rate cuts are on the menu. And in that context, crude oil being down comes together to say, well, if yields are going to come down, but not for catastrophic reasons, why would they be going down? And why would a cyclical asset like crude oil be going down with them? Why would anti-fiat alternatives that tend to thrive in low interest rate environments like gold be outperforming? Why is the euro and yen looking so strong when their interest rates are lower than that of the US? Well, all of this seems not to paint a sell America story, but a recessionary one. There's some kind of economic downturn in the works. But stocks are up, you might say. Sure, but in dollar terms, they're not, because the dollar is down more. The dollar is down more than stocks are up. So if you were an investor in U.S. equities, sure, if you are a U.S. investor, then the dollar is your currency in which you operate, and you don't see the exchange rate difference. But if you're a foreign investor, let's say, in U.S. markets, you're actually down money because stocks have gone up less, let's say for the S&P, 5.4%, then the dollar has fallen 13.9%. So if you made 5.4% on your US dollar denominated stocks, you're actually out money on the exchange rate. So is this exuberant risk appetite? Doesn't look like it. In an environment where the net is for the dollar to fall a little on an average quarter, and for stocks to go up 3.7% on an average, or not quarter, 6 month range, and for stocks to go up almost 4% on the same scale, well, yeah, that makes sense. That makes U.S. markets attractive. This is not that story. Now let's take a look then where all of this leaves us. If the markets are positioning for some sort of economic downturn, where are we across the major assets as we head into the second half of the year? Here's the S&P 500. Despite kind of low percent change values, it is at a record high, nominally, of course, because the way you get those narrow percent changes is you get this wild wick on April's candle. But also what you clearly see is negative divergence in momentum studies. And this is the relative strength index, which is just a basic oscillator here. And what you see is that although you're setting higher highs on the price, you are not setting it on this oscillator, which in pure arithmetic terms, not technical analysis, voodoo, not anything like that. Just pure arithmetic. The way that RSI is constructed is it's a ratio of average closes up versus average closes down. So all it's really telling you is whether the price has a propensity to close up relative to down. And you can see that in a normal situation, as the price rallies, it also has the momentum behind it, as it were, to have the propensity to then keep closing up relative to down. So as the price goes up, RSI goes up. Until it doesn't. You can see these divergences, for example, in 2022, where this precedes a loss of momentum that leads into a top. It's a similar story in 2007. It's a similar story in 2000. And so we've seen this movie before. When it happens on a monthly chart, this kind of a loss of momentum can be toppy. We haven't seen it confirmed yet, certainly, but does look like we're getting into some rarefied air as momentum is drifting out of the market. Same story in the NASDAQ. Again, record highs, but we're not matching it, again, in just pure arithmetic terms in momentum studies. So, again, looks like despite what the price action is doing, this market looks like it's feeling toppy and losing steam. After all, this also in 2022 was a record high. But because we set it with momentum fading, only a matter of time before it turned into a year-long sell-off. The situation in bonds is a little bit more nuanced because, of course, we just saw that yields have been going down. And indeed, you can see that here. But the move so far has been relatively modest. And in fact, things have been broadly range-bound after the rate hike cycle that ended at the end of 2022. So as the Fed has idled, so too have yields to a large extent. But certainly there is no sell America panic here. And indeed, since the beginning of the year, yields have come in. This is the 10-year yield future, not the bond. And you can see we're a little bit lower. Not catastrophically so, but what that tells us is, of course, that if the Fed really does start to cut rates, then we have all kinds of room to go. But all of what the headlines would tell us is a reason why bonds should be collapsing and yields should be soaring because confidence in American credit has been lost. None of that is on this chart. It is the same thing with the 2-year yield. Here you can see actually the dovish implications of what the markets think of the Fed are a little bit more obvious. Not surprising. This is more sensitive to immediate Fed policy. And you can see yields are in from the beginning of the year, but they've actually been coming in since the beginning of 2024. And indeed, we got some rate cuts last year to show for it. 100 basis points of them, as a matter of fact. And so we've had a level change in yields. People are buying these bonds. They're expecting easing. The Fed only sees 25 basis points in rate cuts next year. The markets see closer to 70. Again, this is smelling of some sort of an economic downshift that the markets are envisioning, that the Fed is going to have to respond to. Crude oil, for all of the fire and fury on the geopolitical front, has been steadily declining since 2022. So far this year, the net effect of what we've seen is just more downside. Now, we've kind of anchored near what is essentially the former support in this range here, and these long wicks on the monthly chart suggest we tried rallying through them and failed, which again tells you if there's kind of a geopolitical concern here, we'd be seeing something else. In fact, this long wick is a picture of that geopolitical concern failing to be a longer run motivator of price action. So what do we see instead? Well, this is a cyclical asset. If it is sensitive to supply and demand for energy, which is what you might expect, then what this is telling you is that's the thing that matters, because otherwise it'd be rallying, which is yet another little bit in your get ready for recession argument. Gold seems to have the most of its run up at the start of the year and is now idling, but very tellingly is holding its ground, whether the geopolitics improves or doesn't. Obviously, crude oil here has been a story where the geopolitics are being shrugged off. So that gold is holding up here, very clearly not a story about that. If it were, it'd be falling. But it is holding up. What's holding it up here? Falling yields and a falling US dollar could certainly do it.